we're going to be looking at your new journey that you're going to be taking. While you're going to be learning everything in the boot camp, it is not everything. It is just the tip of the iceberg, and your real journey to becoming a mastermind begins afterwards. Becoming a mastermind is not going to happen in 4 days. The mastermind boot camp is not to, you're not going to become a mastermind right after the boot camp, right? There's, criteria, there's, results that, are needed to be attained when it comes from, analytical performance growth, equity curves, to really ensure that you're starting to grow your accounts based on what you currently know. So while you're going to be exposed to everything in the boot camp, afterwards is going to be your piece by piece approach, mastering all the concepts one by one at your own pace, where you're going to be having quizzes, exams, the continuous, engagement within your community, the peers that you're going to be working with as you go through the levels of success. So everything as it is handed to you in the 4 days, most of you guys might be confused, like, wow, I can see it, but I'm still not putting all the pieces together. Again, like I told you guys on day one, this is meant to initially shock your system, as if, everything I knew is completely garbage down the drain now. Now that will be our time to properly rewire your guys' subconscious so you can understand how to analyze like a mastermind, but most importantly is the results, right? The whole purpose of trading is to be making money. And while we're going to be heavily emphasizing the strategy throughout the boot camp, afterwards, that's where the mindset, that's where the results, your performance, your equity curves, all of that is going to come into place and show you the true meaning of what it means to be a mastermind trader. So again, this is just the beginning. There's, and in your whole journey, the boot camp is going to end up being less than, I'd say 5, 4, 3, 2, 1%. It's not even going to be, you're not even going to remember this come the next several weeks or months to come, because it's just your first gateway to all to come after the live sessions, XYZ. So with that being said, everyone, I am very excited for everyone to be a part today, and we are going to dive right in. Let's see, to turn this off. Should have saved. All right. All right, everyone, so let's get right to it. All right, guys, so don't want to waste any time. Always have to go through the rules, reminders, expectations every day. So again, today's boot camp will hopefully be the shortest out of the days. Day 3, we really covered the the majority. That was the foundations of everything. Today is just going to be the additional confluences, and especially how to approach the charts on an intraday basis by using the cycles and combining everything that you already know. Now, these things are not going to be necessary. However, it is going to all the greater put more logic and more confluence behind your trades, especially on an intraday and weekly basis. So again, no recording, camera on the entire time. Please be mindful. Antoine, he has been actively watching. You guys have been doing great. I'm really very happy that we haven't had, any encounters thus far. And I can't emphasize again, you will not be learning absolutely everything in the boot camp. Completely impossible to teach 4 days with all that I have stuck in my mind, and especially the experience that you're going to learn after. Okay, so today there are going to be, some very select slides that, again, no games, no gimmicks playing around. You guys will have an opportunity to receive everything afterwards, especially the videos, the ongoing education, the boot camp. For obvious reasons, we do not put everything in there, right? We can put as much as, we think is necessary while I'm talking over some of these concepts. But afterwards, again, that's where you're going to have everything at your own disposal, at your own discretion, right? So let's just be mindful of that and have nothing. We're not going to have any occurrences today, right? We're going to be ready to roll. I want to see 34 yeses, 33 yeses, right? We all good? Not going to have any issues on day 4. All right, 18, 19. Let's keep saying. Well, everyone got an answer here. I'm just got ready to roll. You have nine more people. Yes, 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 yes. 5, 4, 3, 2, 1. Great. Happy to see it. Good. All right. So again, write down all your questions. Today at the end, we are going to be having a Q&A session. So any questions that you guys have, there's going to be approximately at the very low end, 30 to 45 minutes, at the high end, up to an hour and a half of Q&A. So all the questions that you have, come together. We're going to review them at the end. Once we go through all the cordials, everything, your next journey, that's where those who don't have questions are more than welcome to leave. Those who do have questions, I encourage you guys to stay. So just remember to have and write all down all of your questions. I know that we had some yesterday and on the previous days. If you have questions, you are more than welcome to ask. I'm always happy to answer them. But in the recording session, so take high quality notes today. I did even switch it up a little bit more. The first block is going to be brand new to majority of people, right? The actual system, the actual steps to the algo, not just, the trap, the inducement, XYZ, but the actual steps and the points, no matter whatever the trend is. So you're going to be learning how to identify the phase you're in, how to understand what's going to happen to take place, how to take your stellar trades from there. So taking your high quality notes, very important. Again, there will be opportunity afterwards to receive the diagrams, whatnot. So last part, have fun, trust the process. Again, we already know this is supposed to enjoy it. Again, if you feel overwhelmed, that's the point. So control what you can, right? Write down good notes, enjoy it, relax, have fun, be engaged. If you're struggling, you're finding yourself constantly writing notes and running out of time, I can confidently say, just watch and enjoy today. Again, when those questions come up that can even relate to notes, if you have any questions about notes, some things that you want to have finished, I'm more than happy to fill you guys in on that. So let's get right into it. So today is the last day to receive the giveaway of the 50K MFF challenge. Again, this is completely free. You can take a picture of your notes, the bootcamp, tag us in your story. If you have tagged us and we haven't reposted it, it's because your account is private. For us to receive that notification, make it public. Again, completely free. The winner will be chosen tomorrow. And that we'll be receiving a brand new 50K MFF challenge, completely free. So if you've ever wanted the opportunity to participate and have an MFF challenge, it doesn't matter how many followers you have, doesn't matter about any of that, just creating exposure. We would love to give back, to you to really create and give you an opportunity to jumpstart your trading journey, especially with us. So if you ever wanted to have a funding account, this is the opportunity, completely free. Again, DM me for any questions, and all submissions are going to be due today at 5 p.m. EST. That is 7 hours from now, a little under 7 hours from now. So just be mindful of that. So let's get right into day 4. Little surprise for you guys debating on whether or not to do this, but we are going to get right in first things first to our warm up. So what I'm going to do is you guys are going to be broken out into your breakout rooms, and you guys are going to be analyzing only this picture, not going to trading view, but just going on this picture. And you guys are going to be analyzing this together in your breakout rooms. So now starting today, you guys will be able to share your screens in the breakout room. I didn't realize that permission wasn't on. So you guys are going to be completely analyzing this trade. You're not going to know the pair. You're not going to know anything. So there's not any, majority of people should not know exactly where this is. If you do, well, try to let the others, work for it. So during this, you're going to be in your breakout rooms. Again, there's going to be 9 questions. You're going to answer all 9, and we are going to have, like we did yesterday, we're going to have the leader share their screen with the entire community and show us all these 9 bullet points. And please label them properly. So you're going to be identifying the main structure, the internal structure, this PV and pro trend. This is something that many people oftentimes forget. So when I'm talking about your main structure, right, it's just your higher time frame. Within your higher time frame, we know that we're going to have, of course, an internal trend. So what you always need to do is you need to make sure that you identify where, let's see, here, right? So you need to identify your pullback and your pro trend or your continuation. Your internal structure, what do I mean by that? When you have a break of structure internally within your main trend, it's either going to be creating a pullback or it's going to be resuming the pro trend, right? So you want to identify both of these. Where does the pullback occur on the internal structure? Your pullback is going to occur within your main trend when it has that pullback, right? So it's going to be your internal pullback, and then your internal continuation is going to be when the internal structure aligns with your pro trend. You want to get in the habit of doing this for absolutely every range. You can't just identify this point or this point lower highs until you know specifically where it broke. So again, if you have any questions, let me know, but just make sure that you include both of these. So your main trend, your internal trend, where your higher time frame inducement is for your destinations, where your internal inducement is for your gas. You're going to be identifying the extreme and the decisional POI, and you're going to be showing order flow if it is present. Additionally, engineered liquidity, you're going to be identifying this where your walls are, where your SMTs, and then your overall projection. And this is going to be inclusive of everything starting from the left to the right. And you're going to project where this trade is actually going to go. The move hasn't happened yet. It will be happening. So you want to identify where the move is happening, why, and you're building a whole narrative. So I'm going to give everyone, I want to say, what do you guys think? 10, 15 minutes? I want to see who really thinks they know and work together with their group. What are you guys thinking? I can say 10 minutes. I want to say 10 minutes, but I'm not sure. What you guys say? 12 to 15, Zane says. Let's get a few people in here to comment what their thoughts are.
10 minutes to analyze?
Yeah.
5.
But yeah. All right. So it looks like 10. So let's do 10. So again, you guys are going to be walking through this together. You're going to have your leader. Your leader is going to be the person in your group that shares their screen with your group, and everyone in the group is going to walk through it together as the leader is annotating everything as it should appear. And then the leader is going to share the screen with the entire community once you're back. So again, when you're making these annotations, make sure to either take a picture of it, because when you're in your breakout rooms and you share your screen and you annotate, when you come back to the main room, all those annotations are going to be gone. So just make sure that you save your picture or make sure that you keep it so you can teach us and walk through the community. Again, we're going to have 6 groups, 6 to 7 groups. And yeah, guys, so that's going to be probably the first half hour of today, putting everything together that you've learned so far. It takes 5 minutes to find the leader. Leader's got to step up. That should be the first 30 seconds. All right, everyone. So we ready to get started with it? All right. All right. I have just shared both of the pictures in the announcement chats for the main and the new community. So what I'm going to do now is start these breakout rooms with you guys, and let's see. Breakout rooms, recreate. All right, let's see. I'm going to recreate this. We're going to do 6 breakout rooms. All right, we're going to do 6 breakout rooms. So there's going to be 5 of you guys in each group. All right. I got to recreate 6, recreate. Cool. All right, everyone, we're going to go ahead and get started right now. So go ahead, everybody, and go to your rooms. And your 10-minute timer is going to start when everyone joins their room. Ziggy, set timer for 11 minutes.
All right, let's see.
Working with others, because you
Griffin, you're on mute, can't hear you.
Oh, I just fixed it. I was saying, yeah, how was it, everybody? How do you guys feel about that? You guys think it was good? A little tough? Working with others helped you a little bit?
yeah, it was a good experience to work with other students. Yes, it was. But at the end, the problem is you could not save the picture because, yeah, which is not a problem.
Yeah, definitely.
I think it creates some interaction with other students is good.
Oh man, Raymond just said good, but we didn't have the numbers. All right.
Okay.
Well,
it was still good though. It was.
okay. All right. Good, man. Good. Yeah. And that's where it helps because a lot of people oftentimes overlook, working with others because, you are only capable of knowing what you know. You aren't capable of knowing what you don't know. And other people can provide an insight that you might have not otherwise seen or give you definitely a new perspective, and definitely being open and working with others, even providing your own insights can really be beneficial to someone else's journey, especially since, we're all on, the same mission, right? So I'm glad to hear for the most part that it was useful. But of course, as we continue, we'll only start to improve. So with that being said, we all felt good about this. I know that the numbers weren't there, but given that the numbers weren't present, would you guys say you had majority of these things identified? Awesome. All right. Well, with that being said, I know you guys don't remember your groups, but the leaders of those groups, what I would like you guys to do now is if you can share the picture that you guys took of that chart, if you can publish it in the community chat of whatever community you're in. And the first one that I see, I'm just going to click on it, and then I will be sharing my screen. And if the leader wants to walk us through, that's how we're going to go through this. So again, the faster we move along, the quicker that we're going to get into today's material. So I definitely advise y'all to step up, take a minute, send your picture, and we will get started. All right, let's see here. In the meantime, everyone go ahead and share their pictures. All right, let's see here. Again, during this period of time over the next minute, you guys can just send your screenshots. Marcus, you sent yours, so let's see. All right. All right, Marcus. Did you want to walk us through what you see?
Yeah, sure. I can try.
Beautiful.
The red lines you can see is actually the consideration of the current main trend.
Awesome.
The yellow one is the internal trend.
Mm-hmm.
We try to highlight the pullbacks and the continuation structural breaks. The red line and the yellow line is a little bit shifted down because otherwise we could not see the real structure whilst we continue to analyze.
Mm-hmm.
So that's why we first created the lines, but then we moved them a little bit away to have a look on the real structure, in fact.
Awesome.
Then we try to identify what's the main inducement, so in which trading range we are actually in. Unfortunately for us, it's not clear what was mitigated with the last lowest low we would have, because of course this would help to consider what could be the next move. Let's say if it's a real order block been mitigated, then we could consider that main inducement would be taken out. And if it's only an SMT mitigated, then of course we would consider a continuation downwards.
Can you refer specifically with your analysis tool, your annotation, can you refer specifically to what you're referring to?
Yes. So here in this place, we don't know what was mitigated on the left side.
Mm-hmm.
Because if this would be a real OB here been mitigated, then we could consider actually that price probably does something like this, coming back down and then breaking structure to the upside and getting the main inducement on this side.
Mm-hmm.
But if this was an SMT mitigated here on the left side, then we would actually consider price already continuing down or coming up to the extreme, just for the reason because we have engineered liquidity here with equal highs and with equal highs, but still have some imbalance with an order block residing here.
Mm-hmm.
So that's what we.
Awesome. And let's say this was an SMT based on where you currently see price. Where do you see order flow intact at the moment?
This was the last point where we saw order flow intact at this point. This one took liquidity, but we had still some very minor imbalance here where the move started, and it was mitigated until here, when then we can see going higher, coming back, mitigating, going higher, coming back, mitigating. So this is considered a wall for us. And then we have engineered liquidity and an order block residing here. So in this case, we would actually consider that price might come back here.
Awesome. So awesome. Now you have the buy order flow identified. Where's the sell order flow currently present?
Yeah, that's a good question. We didn't come to this one, but we just identified, it's a little bit small, the last imbalance here. There is an imbalance, and all of this was mitigated down here, went down, came back up, went down. So the last mitigation stopped here, and then this one mitigated, obviously, the last order block here. So from that point of view, you can consider everything here at the moment is mitigated.
So from there, then, what would be another option?
This one here.
Okay. So you imagine sells from that one or the one above?
Well, if we consider SMT, we would actually consider this one. And if it's a real order block, then, well, this could well be this one, because we know this is an internal, this is an high. But if it's an SMT, it should be respected. And if it's a real order block, it might go above.
And I love that you made sure to emphasize that point. That is so important. Awesome job. When you're referring to over here, and everyone, when he's referring to a true order block versus an SMT, he's referring to what's to the left, right? If this was mitigated, if this was a real order block, you could expect price to, potentially come all the way here, if not break it. If this is an SMT, what does that tell you, Marcus? If this is an SMT, based on what you currently have, what should be the scenario?
That just means if it's an SMT, it needs to get further internal. It needs to visit a gas station to take out the main inducement below.
Exactly, right? So that's the thing. When you're expecting a main, when an SMT is mitigated, you're expecting potentially that your main range should be kept intact. So that means everything within your main range, you're going to have just, one or two order blocks. Here you have your extreme, and then here you have identified a decisional, and then you identified your other one that still follows order flow. So that's awesome. You highlighted virtually everything. So great. Love to see it, man. Awesome work, you and your team.
Thank you.
Awesome. Yes, sir. All right. Let's see now who else. We have a few more groups to go through. So I'm going to go through them. Let me clear this. All right. Let's see. Man, Raymond, you a cheetah. You went right to the charts. Who else do we have?
Yeah, I forgot to take a screenshot of it, so I just quickly drew up what we came up with.
Okay. Where's that at? Oh.
Yeah, that's it.
Right here. All right. So you're saying based off of this, you are looking at, walk us through it.
Okay, so yeah, we didn't have our exact numbers plotted up, but we'll go ahead. We'll start with our main structure points. With the little kind of bullseye targets. You have a low, got a high, and a new low. So we're working within this range. We have our main inducement points coming from the lower high that leads into the lower low. And as we work with this, well, we'll go with the internal structure. The very first have it labeled as IBOS as our internal structure points, internal breaker structure.
Can you animate it as you're going through?
Yeah, for sure. I can do that too. Sure. Let's see. Boom. So yeah, this low that creates a high that eventually gets broken. So from here, we have a new low and our, what is that, low, high, boom. So technically this would be our high to low. Price pulls back, makes a new low, lower high, lower low, lower high, lower low. Price finally breaks it here. From here, I would honestly use this as my high, then a new low. To me, this is kind of all one push. this is kind of where it gets subjective. I forgot who asked yesterday when it comes to structure. I kind of just try to pick what's the clearest, kind of not very questionable.
Mhm.
So from here, I'll use this low, this high, this low to high. Price breaks here. Constantinos gave a great point in the sense that this could be an inducement to go on higher. We have the extreme order block all the way at the top with the very small imbalance that we've seen right here. We have the decisional coming from an order block that creates an imbalance right here. We have our engineered liquidity coming from this order flow that starts here that doesn't really mitigate anything. So we understand that this is a possibility for an internal breaker structure to go lower, or maybe it's just an inducement to go on higher. But based off of this annotation, we're expecting this order block to hold. If this is the true order block that's going to take us lower, we have our internal breaker structure right there, stopping out any SMC traders that are looking to take this order block up to new highs. We also have another wall that was formed with order flow, just giving us clear bearish order blocks, taking us further on down. We also have another SMC trap that I forgot to mark up right here, where SMC traders is looking for that nice big imbalance bearish order block to take sells, get stopped out. So we have a lot of traders getting stopped out here, looking for some good liquidity in the market to take us on lower. We had another wall down here where order flow is very clean. And this, I think, technically would be engineered liquidity too, because it doesn't really mitigate anything, maybe on a lower time frame, but definitely mark that up as well. And I'm sure there's some SMC traders maybe trying to take this order block up higher, but doesn't really take out any structural points.
Awesome.
We also marked up the inducement where this high, I know there's a lot of markings right now. This high was taken to induce any of the early sellers, and then obviously we induce the buyers here. So stopping out the buyers and sellers at the same time.
Awesome. You had every point, man. Great. Love to see it. Awesome job. I got nothing to say about that. You did great.
Cool. Yeah, the only thing I'll bring up, because we did have a question, whether you want to go over now or over later, is technically this order block was swept here.
Exactly.
So we weren't sure exactly how we would go about it.
Good. Yeah, definitely. So just to that quick point that you just briefly mentioned, this order block here, when you make your refinements and when an order block is broken, it is invalid. It 100% is invalid. The only reason I use this decisional order block over here is because this was on the time frame that you could clearly see everything. This was actually a daily order block. This whole block was. So I had to use this quote unquote refinement because on the daily you wouldn't have seen all the information that you needed. So yes, that is an invalid order block in that case. Because Raymond, what's the only order block we know price must mitigate? When it comes to any general order block, what's the only one that we know? Not decisional on extreme, but what's the one that we know must get mitigated?
The bigger one.
The biggest one, right? The biggest one. So by making sure that this is not the biggest one, by zooming out, that's going to ensure you're not going to have over refinements, order blocks that are getting stopped out constantly. By ensuring you have the largest one and then going it on lower timeframes and making those refinements, that's how you're going to go about it. So to answer your question, yes, this order block was taken, it was surpassed, but this is a trade that I actually called a few months ago, and it ended up being perfect. So good question.
Cool.
All right, let's see. Higher talking will be, but that doesn't matter. No. Okay, let's see. What other group do we have? We have a couple more groups. So let's go right there and see what you guys have. Let's see here. All right, Mr. Hugo Villafuerte.
Well, like the like the other groups say, especially just the last one, I agree with a lot of stuff that he said, because we identified that this one, let me, what is the other here? We identified that this one was the main trend over here, and we think that we are still bearish, and as you said, we identified that the yellow box is the decisional order block, because the one the extreme is this one.
See,
And because we have already an internal shift over the yellow one, over here, we have already the internal shift. We are expecting the price to continue, like you said, to the bottom. One key thing I have noticed is that the interaction, interaction of the demand over here,
Mhm.
it's like a key factor because we have the liquidity graph in here, and this one is an internal range because the liquidity graph and then the follow-up to this one over here. And when price came back, we have an interaction over here, and the order block was taken out. And this means for me that this will be the current inducement to validate this order block to then continue. And then we notice that this over here is the perfect engineer liquidity. So this validates the decision LOB.
Mhm.
And we have the smart money traps are the yellow arrows, because this one over here makes an internal BOS, and this one too, because this one, the first one, the smaller yellow arrow, is taken out immediately because we are already at external range liquidity over here, the one with the double stamp.
Mhm.
Already at our external range, and that means that the continuation, the pullback has already started with the shift, the first shift of the smart money trap over here.
Mhm.
Then the second one is exactly the perfect smart money trap because it has the internal continuation, but it's an old one, so it only creates some kind of pullback to then pull back over here.
Mhm.
So we can grab a little liquidity and then continue.
Perfect. Perfect. Awesome. Absolutely. And you made where was this? Yeah, all these smart money traps that you have, those are perfect. There's one really important thing I was going to say about what you had. Oh yeah, right here. You identified this as an inducement. That is perfect. I'm about to share my screen once we have the other remaining group, whoever would like to speak, go through it. But absolutely right, because within here, you're identifying this as your internal structural COC, right? So that being said, then you're looking, if this is your structure break within your internal trend, you know that within here, you're going to have even a more internal trend, right? And you're identifying this as here, 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 here. So this becomes your internal inducement point for Bryce to take out. And then it just repeats, right? And then you're now looking to target this trend, right?
Yes.
Awesome. Love to see it. Good, great job, bro.
Thanks.
Awesome. All right. Well, was there anyone else who wanted to speak about go through? Did anyone else share their screens?
Can I do it?
Yes.
Can I share the screen?
Yes. Are you able to send a picture?
I don't know. I just recently write that I don't know how to draw. But if I share the screen, I can draw with the tools of the Zoom app.
When you go to annotate, there should be an annotate button on your Zoom. You go to more and then you press annotate. I think that option should be there.
I have that. Yes.
And then does it allow you to draw or no?
Yes, I can draw.
Okay, so let me go back to here then. All right, we're almost through. So then I'll let you do this right here. And then we'll get right to today, everyone.
All right. So can I do it?
Yes, let's take 2 minutes at a maximum. We'll go hyper speed and then I will go through everything.
Okay. Extreme, decisional, and we were talking about like this decisional look good, but at the same time is laying on liquidity, and with this corner is also like engineer liquidity. So we were hoping that this price going to be going to the extreme and then going down.
Awesome.
Here are some traps. Wall. Here a trap, SMT trap, SMT trap, SMT trap, SMT trap, SMT trap. That's where we were talking about. Here in the graph, I'm worried about this imbalance. So we were talking about like the price gonna go there, I don't know, go there and then go to this order block. We were debating on.
The one thing about this, if I ask everybody over here, where's the engineered liquidity? So what can give us confirmation over here that this is a solidified high, meaning we have a new lower high and a new lower low. This might be advanced, but how do we know for sure that this is a lower high? I don't know if you guys remember what I was saying yesterday, but when you're drawing up these, besides the fact that it makes a new low, what are 2 things that this high needs to do that'll tell us that this will be respected? Like that price will not break this high. What are 2 things that this high needs to do?
Follow order flow.
Also that there is nothing mitigated here. Yeah.
So that being said, 2 things price needs to do, right? It needs to, 1, take out enough liquidity, and 2, needs to mitigate something to tell us that this high is going to be respected. So can everyone to the left identify what this high liquidated and what it mitigated?
That wick, the little wick.
So exactly, you guys have already identified it. Now, looking at this over here, how do we know that this is a solidified high, a confirmed lower high, and a confirmed lower low? Well, of course, it makes a new overall low. But in addition to that, where's the engineered liquidity over here? Everyone identify. Where's the engineered liquidity? Where's price first pick up after an imbalance and create some form of mitigation? Mr. Ducati, whatever, Jorge, Mr. Moreno, yes. Beautiful, right? Huge imbalance. This is where price first picks up, and that's where order flow is mitigated. So again, big imbalance, 1 pullback, 2 pullback, drop. This is engineered liquidity. This is our engineered liquidity. So it took out our engineered liquidity. Now, this is a more advanced concept. What actually did it mitigate? Here, we see there we had an imbalance after our engineered liquidity. Over here, this is our whole order block that was mitigated. Specifically, this on a smaller time frame, we see price pulled down, had a small pullback, the pullback down. This indicates that there's some form of order block, fractally speaking, within here. So it did mitigate some form of order flow and take out a form of liquidity, both of which tell us that this is a solidified high. And it's just those minor details. If you can find those and you can use with a high degree of logic, it's going to completely transform the confidence that you have in this trade to tell you 2 things based on what we said yesterday. Whenever you're looking at a range, right? I don't know if you guys wrote down those steps, but remember, when you're looking at a range, what do you need to do? You need to figure out what the current high of the range mitigated and what the low mitigated. If the high mitigated some form of order block and took liquidity, we can expect the range to remain intact. If the low mitigated some form of SMT, that tells us with another form of confirmation that price is still going to respect this range. On the opposite, if this range over here, let's say this didn't mitigate anything, and then this mitigated the correct order block, well, guess what? Now we know this will be a target. So it's just taking it to the next level of understanding that, again, will happen over time. But that should hopefully make some sense to most of you guys.
So we can say that this is the correct order block.
It's a valid one, yes, but there's always a decisional and an extreme. So now, if everyone is done sharing, we are going to go through and I'm going to share you the actual analysis of how it played out. So are we ready to see that? Yes, see, no?
Yes, sir.
Awesome. All right. Well, here we go. I'm going to share this with you guys right now. Yes, yes, yes. Okay, cool. Now this is the actual analysis. Oops, we go to here. All right. So this is the actual analysis of everything. And I remember specific points that you guys mentioned, that you guys talked about, where all of you guys hit all the points that were covered. So first of all, where is the main range? The main range is from this lower low, this lower high, to this current lower low. Now to the left, this mitigated an SMT. Again, let's just assume it mitigated an SMT because it did to the left. So it tells us our current trading range, our main leg, is from this lower high to this lower low. Now that we know what our main leg is, our main range, the next thing that we need to do is identify the internal range before any order blocks before that, right? So where's our internal range? Well, we see over here that we had an internal lower high, internal lower low, then we had another internal high that ended up actually making a new high. So I believe it was Raymond that you said this was the internal break of structure. You are absolutely correct. We can't just say that, oh, here's a new low, here a new lower high. Why? Because this does not break the main range low over here. This has to be broken before we can start marking any of the internal structure points. So now we see once this internal higher low, this internal higher high was broken, this is the first point on this time frame, the 4 hour, that tells us, well, this internal BOS indicates now we're back aligned with the main cells. So now we can expect this bearish higher time frame leg to now confidently be forming. Now we have a new internal low over here. Again, this BOS high, new internal low, price pulls back. Over here, what do we see? We have some form of order flow, right? Order flow. These are cells that we took, all great cells. And where are you going to be targeting these cells? Of course, right? This major inducement. Knowing that all of this in the future is going to be building a wall because we have an imbalance, price picks up, starts mitigating, creating order flow, and it drops. So this here is a wall. Price then makes a new lower high, lower low, lower high, lower low, lower high, lower low. We see that we have an internal break of structure here. What does this internal break of structure indicate about your main leg, everybody?
That the pullback is starting to get in order.
Exactly, right? It's indicating a pullback. When you see a break of structure on an internal time frame, that tells us the higher time frame leg is now going to be pulling back. Again, we only say it's a BOS when it mitigates an SMT to create a pullback, or it mitigates a true order block to cause, a new trend. So in this case, SMT was mitigated. We had a BOS indicating now that we have a pullback. And to one of y'all's points that you guys identified, I don't know if it was Raymond again, some of you guys would say, oh, here we have a high, higher low, higher high. But then notice what happens, right? It breaks it. The reason for this is because we have a high, higher low, higher high. This would be a type 1 or type 3 inducement based on your perspective. So because we need our internal BOS, we can't just be drawing this. This doesn't tell us anything, right? We need to make it look like a pullback, right? So we need to make it look like this. So how do we switch these structure points to look like this? Well, you simply just choose high, higher low. You skip these two because it doesn't make any sense when you're trying to make it look like this. So you just identify the highest one, and then guess what? The low one. And now you see we now have structure that clearly tells us some form of story is going on, right? So now we have an internal high, internal higher low, higher high, higher low, higher high, higher low, higher high. And then we see price break again to the downside. At this point, this tells us that the pullback of the blue trend is now over because the internal BOS now confirms that we're ready to resume the higher time frame trend. Again, we use structure to understand phases. We do not trade structure though. If you can navigate structure flawlessly, you're going to be able to identify everything everywhere with the highest understanding of what's actually going on, right? So then we see right now we have another pullback. This pullback, like I mentioned, indicates that this pullback wave is over. So now we want to be targeting a new structural lower low. But that's just the start, right? We need to start figuring everything else out and making sense of it. So after we assume that we have a new low, let's start backtracking. before we become good analysts, good traders, we have to be phenomenal storytellers. We have to be good authors. We have to make sense of everything that has happened up to this current point. So stepping back, being objective, if we know to the downside an SMT was mitigated, that tells us this current range is going to be mitigated, or it's going to be respected, because this SMT only indicates a pullback for the main range to be expected. And for those who don't know what I'm saying, essentially what I'm saying is over here, let's say your main direction is sells. If your main direction is sells, where's your SMT going to be lying? It's going to be lying here, right? And if this is your inducement, this is your trap. When an SMT is mitigated, where do you come back to, right? You just come back to order flow over here to go lower. So if this is an SMT, that tells us this range is going to be respected. SMT over here tells us this range is going to be respected with the anticipation we're going to be making new lows. So now that we know that, now we want to start backtracking, making sense of this. So you guys identified this as the extreme. That is 100% correct in relation to this time frame. There is a fractal level of order flow going on over here. What we can clearly see is we had some form of previous decisional. Again, on a much smaller time frame, we had an inducement. It was mitigated. And then guess what? We don't see any other imbalance, right? The last imbalance is right below here. And just a pro tip, if you do not see any imbalance, that tells you order flow is intact. So right now we're viewing price mitigating over here to now this is the last imbalance. This is the last point that needs to be mitigated. For those who asked, well, this order block was surpassed. It was because this was on a daily, this was a daily order block right here. Now notice it kind of switches. This order block was the order block that actually took out the liquidity to the left. It's now no longer equal highs, right? So if you would have had this information, I think it would have made a lot more sense. But again, you can't include all the internal drawings if you just include this daily. So always make sure to zoom out, because the only order block you know is the highest time frame, the largest one, and it can go anywhere inside of there. As long as you know that, any other refinements, they don't really matter, right? So now let's go back to our 4 hour and let's further pick up. So this is where price currently is. If we know order flow is intact, and this is our daily order block, order flow has been mitigated over here, which tells us money is transferred from here to here, now all the way over here. And where is our order block that needs to be mitigated? Well, it's right over here. And we see that this internal higher low that makes an internal higher high, it was broken. So now what we're dealing with, for those who can see this a little bit easier from this perspective, is we're viewing this. Main order block has been mitigated. That tells us now that we have a confirmed BOS, how do we know that this range is going to be respected, just like we knew this, or this sell range was going to be respected? What two things needs to happen in order for price to go anywhere, but more importantly, for us to say that it's a supported move, that it makes sense, that it's going to be respected? What are two things, everybody? How do we know that this order block, or that this range would be respected? Liquidation and mitigation. What did it liquidate to the left? Well, all of the engineered liquidity. It also had an internal inducement that was collected. So did it meet one of the criteria? Yes. Liquidated. The second thing is mitigation. Do we mitigate a relevant order block? Yes, we mitigated a decisional, but more importantly, a daily extreme. As we just saw, it was the only imbalance. So boom, two things happened that follow the structural narrative of sells. We see this internal BOS tells us, awesome, right? This internal BOS tells us now that we're pro trend, we're back aligned with our main trend for our sells. All of these internal areas are just pullbacks. And now what we're ready to do is we're now ready to resume the sells. So again, what did the high of this range mitigate? Mitigated a correct order block, and it swept or took out liquidity into it. What did the low of this range do? Did it mitigate anything relevant that we can see? Anything with imbalance? Anything with imbalance? Anyone? Yes, no? No, if there's no imbalance, not an order block, right? So that tells us if this is the correct mitigation and this is the SMT. Again, everybody, what does this tell us then about this current range? If this was the right mitigation and this was the SMT, what does that tell us? Everybody.
Going to fail. That is going to fail.
That it will stay intact, that the bearish range will remain intact. SMT, the true. Remember, you're always going to have order flow on both sides. This is the main range. Comes back to where? Order flow, the extreme. High, new low. This is the extreme of the range. Now, what do we see within this bearish range, right? We see engineered liquidity. We see engineered liquidity. Where is that engineered liquidity, right? Well, this is where price didn't mitigate anything. It started then establishing some form of internal order flow. Like one of you guys mentioned over here. This is this is my order block. Here is our, obvious order block. Here's it's just a smart money trap, right? Why is this a smart money trap? Because internally, remember, we have ranges within ranges, and this is where the fractal mastery comes into play. If this is your range, internal range from this right here, you're going to have another internal range, which tells you, even though this is internal to the daily, this is going to be some form of main range with another internal range inside of it. So maybe on the 1 hour, what do we see? Well, we can clearly see that we have some form of internal high, higher low, internal higher high. We had an internal BOS, right? And we see now we have a new low, a new lower high, a new lower low, new lower high, new lower low, new lower high. But again, this was used as an inducement. So because it looks like this, AKA a type 1, right? And then it goes lower. We don't want to mark all this. We just want to mark and make it look like our bearish structure, lower highs, lower lows. And how do we do that? Well, just adjust our structure points. Low, lower high, lower low. Now it fits the lower low, lower high, lower low narrative. Awesome. So to Mr. Villafuerte's point, as he identified over here, we now see that we have what? We have now internal low, internal lower high, internal lower low. Then our last internal lower high was right here. This is the inducement, right? This is the inducement right here. Specifically, when it pertains to the anatomy of the algo, this is the inducement, right? If you guys pull up your pictures or your diagrams of the algo, remember, whenever you go external of a range, if this is the external of the range, where's the first point price must come back to if this is your external? Boom, first internal inducement. Where is that? Well, ladies and gentlemen, it is right here. It needs to come back to your first internal inducement right here at the minimum. So knowing that it needs to come here and assuming and knowing that all of this is engineered liquidity, we then have our order block. So then that tells us, again, this will be an SMT. Again, SMT, perfect, follows perfectly with the diagrams that we have drawn out. Again, that's why mastering the diagrams is so much more important right now before even going to the charts, because it's the exact same thing. Well, if that's your SMT, guess what? Just comes back to order flow to break all of it. And then guess what? The whole cycle repeats. If that's your inducement, your engineered liquidity, you have your order block mitigated. And then what do we expect to do? Where is the buildup in this scenario? If this is our main order block, where's the buildup? Everyone identify, where is the buildup if this is our main order block over here? Even if you don't know, take a stab at it. We got 38 people, 2 people analyzing. Good, right? Our buildup is always going to be building up towards the inducement. If this is the inducement, we know that price is going to be building up towards it. It makes the main mitigation, and then we know price is now ready to reverse. Again, the logic will always be there. You just have to know how to apply it logically, right? That's where most traders fail, especially SMC traders, because they're just applying concepts in random places. But when you do happen to apply concepts in the right places, they will work. That's why SMC fails, because people are just applying random concepts, random places, and prioritizing structure over everything. Because structure is not king, liquidity is. Liquidity is what validates, right? Structure. All right. So now that we have all this, we know this is our engineered liquidity. Then we know price is going to sell all the way down. Well, how do we know where price is going to stop? Well, again, if this is our mitigation, we know this is our SMT following order flow. It'll just cause a pullback to break through. And then it just rinses and repeats over and over and over. So going back out to the 4 hour, how can we expect how price is going to move? Well, as most of you guys identified, during this push, where is the engineered liquidity? Well, there's no imbalance. There was an imbalance, but now it's been covered. Where's the last imbalance at this point? It's just right here. So now we have a huge wall from here to here, because this is where the first imbalance was, right? This point down here is our engineered liquidity. It did not mitigate anything to the left. It left an imbalance right here. So this is where the whole move after is unsupported. This is where we need to come back to make price efficient. So why all of a sudden does price rapidly sell off like this? Well, because if this is our SMC, this is the only logical area for there to be really a pullback. Anything else, it's just going to sell right through. So that's why it sold with such expansion. And as you're continuing to work through your intuition with having the experience, you're going to be able to know that, oh, if I see a wall and I'm projecting price to rapidly sell down, right? And let's say maybe you have an order block up here. Do you really think price is going to come all the way back up here when you have a whole wall to the left and it's in the middle of a wall? Would you really think price is going to come all the way back up here? If you're in the middle of a wall, do you think price is going to come back up here? No. Right? It won't, because price is all efficient. It has no reason to stop. So if it doesn't have a reason to stop, using your intuition, you're going to know, well, shit, I'm probably just going to be looking for 1 to 5 minute pullbacks to get in. So during all these sells on the 2 minute, this is where I was able to scale in a ton of entries, knowing that over here we're all on a wall. This is where you're just able to get in following, fractal structure, following just the same inducement patterns over and over and over again, right? Just the same inducement patterns. You're able to catch all these positions, knowing that it's not going to go all the way higher, because you have the whole fractal understanding of what price is doing. So that being said, mitigates, comes down, and then first TP down, our main one in this case would be right down here. Right. Who said something about IG stories? Jorge, what are you referring to, brother?
Oh yeah, bro. Like, just share a story. I don't know if like you get canceled from the Zoom if you like show the phone, like just to share a story.
No, you can share a story, just anything that's proprietary, like slides about ALGO or any of that. No.
Yeah, no, nothing important. Yeah.
Then yes, that's for the giveaway. If you want to do anything, it can be anything on Instagram. Yes, correct.
Okay, thank you.
Hi, is it possible to share this chart in the book so that I can study it? Is this possible?
Yes. Give me a moment and we're going to continue. All right. So how does everyone feel after going through this? Does that help you guys understand some more things clearly? Let's see. I want to see everyone if this helped you guys. And so you got 11 people. Let's see a few more people.
Griffin, I have a question.
Is it something that can wait until we have the Q&A, or is it?
Oh, okay. Okay, later maybe. Yeah.
Okay, perfect. Much clearer, beautiful. Love it. Need more practice. Damn, hey, you got all the time in the world to practice, brother. Practice makes perfect. Can't start in the game if you don't have practice, right? You're in the big leagues now. All right. So with that being said, everybody, let's go right back to our presentation. So now that you guys have had a good warm up to start today, we are going to have a 5-minute break. So go get what you need, get started, energy drink, dogs out, anything. And we're going to be back here 5 minutes on the dot. Be prepared as we're going to dive right into day 4. All right, you guys are free to go for 5 minutes. Are going to. All right, if our admins can let me know if we're all ready to roll. We are going to push right through.
Okay, everybody, if you hear my voice, please get back in front of the cameras and get started. We've got a lot to go through today. Adhering to the rules regulations, but there's one or two of you who's not always maintaining view in front of the camera. If we don't see you in front of the camera, we're going to put you to the waiting room. If there's repeat violations, we're going to take you out. Everyone here is an adult. Everyone here knows the rules and regulations. So please stay in front of the camera. If you're going to separate from the camera for a few minutes, let myself or let admin know, Dreams FX admin know, so that we don't kick you out. I understand sometimes bathroom break may need to be done before the official bathroom break. So please, if you're moving away from the camera, let us know how long you're going to be for, then we won't put you into the waiting room. Repeat violations, like I said, will be kicked out of the Zoom call. Okay, you're going into the waiting room. And I think, no, you're not back yet. Waiting room for you. Earl, you there? I'm gonna put you in the waiting room. Okay, waiting room for you. And we're ready to go.
All right. All right, everyone. So this is something that I was debating, whether or not to put in this boot camp. It's a much more advanced concept, and I don't. This is my proprietary edge in finding this, as long as there's been a lot, but this specifically is, how I approach the markets. And, it's important to note that, this is not just another strategy. If you have what it takes to be a trader, it doesn't matter whatever strategy you use at the end of the day. What's going to separate you from everyone else is the mindset that you have, the, ambition, the consistency, the discipline. All these things that you really have to instill on your own. There's no magic pill. There's no magic secret for trading. If you look at, world-renowned traders, those who make serious money, we're not just talking about 100,000 or even $1 million. We're talking about traders who are making tens, 50, 100 million. They're not on Instagram. They're not broadcasting their life doing this, that. But if you really dive deep and you study what the common trait they all have is trusting themselves, having the not just the ambition and the focus, but the discipline to do the same things, the consistency every single day. With that being said, what you're going to be learning in this block is my routine approach to the markets. This is going to be the first time that you guys are going to be exposed to it, but afterwards, you guys will not have access to this until you go through the ranks of the journey becoming a mastermind, which I'm going to be explaining at the end of the boot camp. It's not like as soon as you're in, as soon as you're done with the boot camp, you can expect to have absolutely everything and all access. If that happens, that's not going to ensure you're going through your journey. Whether you are at a prestigious Ivy League school, or if you're in college, you're in university, you pay for tuition, right? You pay for tuition, but are you going to get all A's just because you join? No, right? You can still fail. You can still not, progress and do the things that, you need to do, because it takes that tenacity, that persistence, and going through those, trials and errors to become successful. So what you're going to be learning now is only the brink of what else you guys are going to have opportunity to learn, but there's a whole scale system, right? So with that being said, when you first join, or if you're even a student now, everything is going to be changing. You're going to have to work your way through the ranks, and all of these concepts are, again, very, very surface level. If you really want to become a true mastermind, following that plan, following the journey after the boot camp, it's not going to be a week, 2, 3, 4 weeks. It's going to be a period of several weeks and months to show you what it takes to not just have $50,000 or $100,000 in funding, but several $100,000 and even $1 million plus, as we do have a handful of traders who do have $1 million plus in capital. So again, even $1 million plus, as we do have a handful of traders who do have $1 million plus in capital. So again, do not be misconstrued. Do not expect to master this in 4 days, in a week, 2 weeks. It's going to take time. It's going to take practice. And my personal promise to all of you guys is, as long as you have what it takes up here, you are going to be exactly where you want to be if you put in the work every single day for the next amount of time to come. It doesn't matter how long it's going to take. Some people, it could take a month. Some people, it could take 6 months, right? So I'm just saying all of this before I get right into this material, because don't expect everything to work from you from the start. If it was that easy, everyone would do it. It's not. We are the 1% of the 1%. What you learn here, you're not going to learn anywhere else. It's not like these are just concepts being wish-washed, rebranded. These are all my own findings, as you're going to learn, not order blocks, none of that crap, but my specific edge you guys are going to learn about. It's what's exactly what you guys need to get where you guys want to be. But it's just the first stepping stone. You guys have to practice, have the discipline, all personal and psychological traits that make up a good trader. And at this moment in time, maybe majority of you guys are analysts, right? Why do I say that? Being a trader means to not just be an analyst, but to actually trust your analysis, so much so that you can do it consistently on a daily basis and making money from the markets and not giving two craps about what anyone else is doing. It doesn't matter whose analysis, this, that, the other. You need to learn what it truly means to be a trader, withdraw from the market, and learn how that can fuel, your life, your expenses, your needs, what it means. And all that to come is later. But again, just introducing this right now, because don't take this like it's just something else. If you do, it's not going to work for you, right? You already have that precedent in your head. Take this as this is everything you need to succeed, and you will. All right. So are you ready to go through this? Hugh, you said I'm a good analyst, but a shit trader. That's what I'm here to help you fix, man. That's what all of us are, right? Because everyone can be an analyst, but very few people are traders. Awesome.
Sir, it's amazing the quantity of crappy information out there.
Can you repeat yourself?
It's amazing the crappy information about trading out there in the internet. Seeing this course today and these days, I can't believe that all the crap, total crap.
I love to hear that. I mean, there's all the resources on YouTube, blah, 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 but I can 100% promise you 99% of people who look on everything on YouTube, they're not making money consistently. They're not doing what it takes, because they're always focused on the analysis. They're not focused on the management. They're not focused on the risk. They're not focused on what an actual plan looks like to make money, no matter where you are. If you have $100, if you have $100,000, exactly. People think they know, they don't know crap. That's where it's like, you have to play levels to this. Oh yeah. Well, you think, keep going, right? You'll see, but This is where it's about you guys. You guys put the investment in yourselves to become better emotionally, to better financially, everything. And what you're going to learn about trading is trading directly correlates to life, setbacks, comebacks, growth, persistence, overcoming failure. You learn so much about yourself when you trade that your whole perspective on the world will change as a whole. And it's absolutely amazing. It's not just about trading. It's what trading will allow you to have financially, time-wise, but your whole perspective on life, right? So, all right. Okay, let's get right into it. So trap and stack. Let's get right into it. Get ready to take some really good notes. Again, high security during this. If you're caught taking any pictures, you are out no matter what. So you guys will have access to this later on through the levels. So let's get right to it. Trap and stack, guys. In this section, you guys will learn the proper application and purpose of trap and stack, how to maximize your financial return in an unparalleled fashion that is in the highest degree. Levels of accuracy most people consider impossible, and learning to develop an algorithmic mindset with this derived intention and purpose that we keep talking about. All right. So let's get right into it. So this also goes along with entries, but not just entries, guys. Entries are the same as your higher time frame. What we use for points of interest are the same things we're going to be using for entries on our lower time frames. So the moment everyone has waited for that last minute, I decided to keep in the boot camp. What is the TNS approach, right? How many of you guys have heard of trap and stack before, or who has never heard of trap and stack before? Type in the chat if you have or if you haven't. Good. Well, because I'm the one that came up with the name. I'm the one that came up with it. Trap and stack, right? Came up with this a year ago, and ever since then, completely my whole view on trading from an algo perspective has completely changed, right? Year ago, learned my own algo, started algo branding, had algo in my bio from last summer all the way until this year. I said, algo, shut up, it's SMC, right? But let's get right into what is the trap and stack approach? My own edge on how I view the markets algorithmically. Same inputs to get the same output, a repeating sequence that always happens everywhere. So what is the trap and stack approach? Utilizing all the concepts that we have discussed thus far, they're all derived around the central bank algorithm. Utilizing inducement, engineered liquidity, SMTs, but most importantly, logic, purpose, and intention. Remember, you can't know what an SMT is until you know what an inducement is. You can't know inducement unless you know structure. And everyone is marking structure incorrectly and utilizing it for the wrong thing. We know why structure forms, and it's just fractal liquidity. It's smaller patterns within legs, right? But most importantly is the logic, purpose, and intention. If there is logic behind a move that follows this algorithmic sequence, you can have a very high understanding that's going to enable you to take trades that are very high quality over and over again. Key point right here. Whenever you see an SMT mitigated, using order flow from SMTs for scale-ins is essential. Whenever you see an SMT is mitigated, it comes back to order flow. If you miss the main move, if you miss a main move somewhere, right? Let's say maybe this is your overall sell, and now this is where price is currently. You can't expect price is just going to come all the way back up here. Why? Well, this is liquidity. So that tells you somewhere within here, you are going to be identifying what? Here, it could look something like this. And if this is where price currently is, where do you guys think price will end up coming back to? Go ahead and analyze on the screen based on what we just talked about. If this is where price is and it's mitigating an SMT at the moment, it's mitigating SMT. Where is it going to come back to? Draw on the charts. Where do you think it's going to come back to? I love it. I love it. I love it. Inducement. We see order flow. Order flow. Boom. It's just going to come right back here. Then to do what? Boom. Sell all the way down. So this is going to ensure that you're going to have such a high opportunity for so many entries. But that doesn't mean you're going to take all of them, right? This is just to prepare you, to show you that you have endless opportunity on a daily basis. It's not just one thing you look for. You're going to have a whole pool available in your arsenal. You're going to have many opportunities, right? So let's get right to it. Using every concept learned by this point has come to fruition, and now you will be able to see how to algorithmically apply these concepts in ways you have never seen before. Or better yet, over the course of the past several days, you're going to see exactly how everything ties together, right? This is the biggest perspective change. Once you realize nothing is random, once you realize everything has a purpose, like in the Matrix, once you realize there is a purpose, reason for everything, that is the exact moment you have to make a conscious decision to either wake up and realize that there is a purpose for everything and learn that purpose, or stay a slave to the Matrix and feel like, oh, well, I think there's purpose, but I don't know it, so I'm just gonna keep doing what I'm doing. This is why people say wake up or escape the Matrix, because everything is not as it seems. There's a whole greater purpose to it. There's a greater, perspective. And what I'm trying to do is get you guys to escape the Matrix, have that perspective of a winning mentality, have the perspective of the true capabilities, because these small guys you see, or whatever big guys, they're all just illusions. They're not relevant, right? We have bigger fish to fry, bigger goals to obtain and achieve. And you guys are going to be setting the precedent going forward, not for a community standpoint, but for yourselves, for your own families, showing what it means to have a skill set that everyone wants, but very few people are able to attain, because you guys have what it takes to make your dreams come true, as I've done myself, as you guys are going to be doing and are doing, right? So now, why and when do we use it? We use this trap and stack for two reasons. One, to identify points of interest, order blocks. Two, fractally speaking, to allow us to get another position or two. Now, again, you guys have seen some of my entries. Sometimes I'll have 3, 4. Other times you've probably seen 15 plus. You guys will not be doing 15 plus. The minute I see anyone doing 15 plus, done, right? The reason is that's not consistency. That is not money making. That takes a very high skill set no one is at this point to do. And that is not the goal of trading. The goal of trading is to be making money. And by showing you trap and stack, it's going to show you the limitless opportunity, just so you know there's no rush. There's no need to rush a setup. There's no need to rush perfection, rush success, because it's all just lying out in front of you. You have to be picky, choose what makes the most sense. And trap and stack is going to show you all the opportunity there is. And just take a few entries a day, and you're going to watch your accounts compound exponentially. So when you're confident, you only need a few winning trades to seriously grow your account. Why do I say this? From a traditional perspective, you've heard people say, oh, if you risk more than 1 to 3%, that's not proper risk management. You've also heard people on the opposite side say, well, if you don't risk 5 to 10%, you're never going to make any money. I guarantee you've heard either one of those people tell you that this is true. They are both wrong, right? Why? Does everyone have the same psychological makeup? No. We have people in this world who are risk aggressive. We have those in this world who are risk conservative. Neither which is bad. There's no such thing as good and bad, right? It's just what it is, right? With that being said, how can someone tell you who is risk aggressive to risk 1%, and someone who is risk conservative, they don't like risking a lot, risk 5 to 10%? They can't. An example that I've used that some of you guys have heard before, it's like, let's say you're predatory, king of the jungle, you're a lion, right? Feast on the thrill of the kill. You need that, aggressive, that dominance. You need that to survive. Will a lion survive in a desert where there's no opportunity, where they're limited in, their predatory state? Will a lion survive? Can anyone in the chat tell me if I'm crazy, if a lion's going to survive or not? Doubt it. So if a lion will not survive, who is aggressive king of the jungle, if a lion's not going to survive in a minimalist, desolate effing environment, how can someone who is risk aggressive thrive risking very minimum? They're not. On the contrary, how could, maybe, I don't know, like a sloth, for instance, very slow, has always the same thing, sleeps all the time. Are they going to thrive in an environment where they're put in the middle of a whole bunch of predators where they're just going to be, eaten alive? Absolutely not, right? Their chances of dying, their chances of failure are going to exponentially increase because they're put in an environment they're not meant to thrive in. So they're going to fail. So risking more is not good. Risking less is not good. What's going to allow you to trade the way that is best for you, that's going to generate the best results, is by assessing what your psychological makeup is. Are you risk aggressive or are you risk conservative? And trade according to that. Now, does that mean to risk 10, 20% of position? Hell no. But it means to maintain what you need, feed your beast, but don't overfeed it and don't starve it, because that's where you're going to be making bad decisions. That's where you're not going to be analyzing properly. Okay. The reason I say this is when you're confident you only need a few winning trades to seriously grow an account. If you're risk aggressive, and if you can choose to confidently risk more, but only risk at your specific areas that you are so confident in, that you've seen so many times, if you have a $100 account and you want to risk X amount, you can double, quadruple, five, you can do whatever to that just in a few trades. If you're more risk conservative and you still have a few winning trades where you're confident and you decide to risk that 1 to 3%, you will still exponentially grow that account. So with that being said, it only takes a few winning trades. I've shown the community, I've done it myself. I don't even know, 50, 100 plus times over the past several years. It does not take a lot to grow an account, but your whole framework from your analytical standpoint, your strategy, your management, your psychology needs to be sharp as the sharpest knife in the world for you to perform where you need to. If anything is off, that's going to set you up for failure. You cannot rush success. And especially going through here, you're going to realize why it's key to follow everything you're going to receive afterwards. So for entry confirmation, identifying order flow after 1 to 2 mitigations gives you high confidence in the trade. If I had to recommend anyone follow or enter based off one thing, I would always say just follow order flow. I don't care if you miss setups. I don't care if it's not as much as you want. If you only follow order flow, how we teach it, especially utilizing inducements, algo and everything, your win rate, I can confidently say, will be 90+%. Now we're going to have stellar trades every single day. That's going to be up to you, but the opportunity is always there, right? So that all depends what you guys, want. Some people want, the skill set more. Other people want the results. Depending on what you're looking for, all of it's there. You just have to make a plan that is going to be best suited towards you. It's going to give you the competence, ensuring you stay on the right side of the market after the trap. Now that you guys can expect structure to be broken, we are not structural traders. We are structure break traders. We are trap traders, right? Specifically ALGO, because trap is a part of the ALGO. Okay. Yeah, even Kareem can tell you, I don't know if he flipped his $200 account to like 10,000, 15,000, then to 100,000. I don't know. Yeah, Kareem, you can tell them later on, but it doesn't take a lot. You just have to have the mentality for it. All right. So let's get right to it. All right. So these are going to be your steps for success. Using your equity in your favor. This is the mastermind approach. So everyone get your notes out, be prepared to write mastermind approach, steps for success. And in 10 seconds, I'm going to be playing these steps. And this is from an analytical standpoint. All right. Again, admins are watching during this, so just take notes. Steps for success. 1, the algorithmic approach. 1, we need to induce, build up liquidity towards an inducement. Step 1, induce, build up liquidity towards an inducement. Again, we're either going to be doing what? Building up liquidity here. If this is our inducement, where is our buildup? Buildup is building up towards the inducement. If this is our inducement, we're going to be building up towards the inducement. 2, trap. We're going to be taking out the inducement into the main directional order block. Two, take out the inducement into the main directional order block. After you have your inducement, after you have your buildup, you're going to have your main order block here. If this is a main order block, what does this tell you about this? It's going to be a type 2. So you can expect that it's going to be making new highs. If this is your inducement and this is your trap, you can expect it price to look something like this for you to be going lower. Easy. 3, react. Induce, trap, react. React. Price is going to have a reaction from an SMT lying at a counter lower time frame inducement. If this is your 1, inducement, if this is your 2, trap, that takes out the inducement into the order block. 3 is your SMT. Where is going to be your SMT in this scenario, everybody? Boom. Fractally speaking, you're going to have 2 potential SMTs, right? Decisional and an extreme. So that SMT you guys identified, yes, is correct. But we could also have another one. You could have an SMT here or an SMT here. Boom. After you have your reaction from your SMT, let's say that we have this happen. Boom. You have a reaction from your SMT. After the SMT is reacted from, the next thing we then focus on is the stack. Stacking, identifying order flow for your positions to react from after a false reaction from an SMT. So after an SMT is mitigated, when this order block to the sell side is mitigated, guess where order flow resumes? If this is where price currently is, where are we going to be looking to get in our position? Boom, right here. After it's mitigated, and let's say that we have something like this. Let's say our next SMT is mitigated. Where are the next 1 or 2 entry opportunities that we can identify? Right? We can have this one right here, where price can use this as an inducement to come down to here and then to go higher. Awesome. That's one option. What is the other option? Love it, Konstantinos. Absolutely, right? If this option, what would we need to see for this to be a valid order block? Exactly. If this is a low and this is a high, we need to see some form of internal inducement before here to then go higher, right? So this is, in essence, the trap and stack. This is the trap that takes out the inducement. The stack is what we're using for order flow, the stack. And then the last piece is the reverse. After we have the stacking come along, we then are going to be reversing the trend. After we create the trap, trading away from the trap, to then target other inducements and engineer liquidity, right? To target other inducements and engineer liquidity. We could have an inducement over here. If we're in a downtrend to the left, boom, we have one target, we have two. And then guess what? The same thing will come into play. Oh, here is our inducement. Here's our trap. Maybe sells is the main direction. Guess what, everybody? I'm doing the sideways. But if this is the inducement, trap, boom, order flow, oh, and then come all the way down. It's always going to be the same. Please understand. It is never going to change, ever. Absolutely. Beautiful. These are your key steps to success in the most simplistic form for the mastermind approach, the trap and stack. Awesome. All right. We are going to continue forward. Now, mastermind protocols, trap and stack algo mastery, learning the ultimate skill set of growing any account with unparalleled precision and confidence. All right. Now we need to get into the algorithmic approach. You guys are going to be ready to take some intensive notes. All right. We got to make sure we're all on the same page. Is everyone ready? Boom, boom, boom. Yes, we're ready. We're ready. We're ready. Love it. Okay. All right. Let's get right to it then. Stack and trap. Trap and stack. Mastermind approach. Mastering the algo for cells. Type 1 trap and stack approach. I'll give you guys a second to go ahead and write down the exact chart as it's exactly going to appear as this. This is the type 1 cell model for trap and stack. Give everyone a minute to write all of this down. I would always draw down these first. All right, 10 more seconds, and then I'm going to get right into it. Okay, trap and stack. Cell model. This occurs when the previous external range liquidity, lower low, aka right here, mitigated it by SMT to have a bullish pullback, targeting internal lower high, aka C. What happens is it's going to build an internal type 2 inducement that's going to take out the engineered liquidity into the supply. Engineered liquidity and inducement are the same TP. Now, when it pertains to the algo, everybody, there is key points to be aware of. The initiation point, the transactional point, and the completion point. What is the initiation point? The initiation point for the algo for anything is always going to be the inducement that is taken. So the initiation point is right here. Whenever you see a structure point taken, automatically the algo is initiated. After you have the initiation point for the algorithm, right? You then are going to have your targets, A and A. B is what we say the internal type 3 inducement. Where is B in this model? If this is our main structure, B is going to be our type 3 internal structure of the range. So that tells us at the very minimum, where does price need to go? It doesn't need to break here, but what tells us immediately is that this is where price must break. And this is our type 3 internal inducement. C is our main inducement, our type 1 inducement. This is where price can come back to when we are looking in a specific case like this. This is all based on C. After 0 is taken for the initiation, we understand that C, the main inducement, which is a type 1, will become the liquidity of the higher range. So what's going to happen during this whole period of time is price is going to be developing the same thing. If this is where the algo is initiated, if this is where it mitigates, afterwards, what's going to happen? We induce, we trap, we react. When I mean react, where does it come back to? SMT, false OB. As soon as it comes to mitigate a false OB, where does it come back to? Order flow. It's either going to start new order flow or it's going to mitigate pre-existing. So in here, what happens? Price will mitigate an order block, and then it's going to go higher. Based off of this, we are going to have some form of internal structure created. We're going to have internal higher lows, internal higher highs. Boom. So now we're playing ranges within ranges. This higher low, that makes a higher high. We're always going to have an order block, especially because we mitigated some form of decisional. That follows decisional order flow. When a decisional order block is mitigated, we know that next extreme that mitigates the decisional needs to be mitigated. If you've never heard of decisional order flow, make sure to write that down. When a decisional is mitigated, follow the extreme of the new range that mitigated the previous decisional. Price will come down. It'll react, build even more order flow. SMT order flow. You're always going to have converging order flow in places. SMT, SMT, SMT. Notice these aren't making new lows. Just going to come down to induce, right? After it makes its induce and it traps, then that's where the target will be alleviated. That type 1. So now what we have is multiple setups within one. We have a main setup and we have an internal one, right? And I think this is where you guys are going to see what I'm referring to. We have the inducement, the trap, and then we're stacking. But this is not talking about the main setup. The main trap and stack is after we have our transactional point taken, our transactional point or the inducement. We have the trap, we're stacking, and then we have another trap. The trap is what we're really focusing on. This is what our main move is happening. So after we have the inducement and where price traps it into our main order block, then this is where we follow reaction and then order flow, SMT, then order flow. Price mitigates, comes back down to our SMT. Boom, there's a reaction. Where's the order flow? This mitigated here. This becomes our new order block. Where do we expect price to go based on liquidity? Well, we take out this gas. Now we have to take out this. So now we're going to be selling all the way down to our next SMT. When price comes to our SMT, afterwards, it's going to come back to where? Order flow. Or it's going to pick up and establish new order flow. You're going to know if it's going to come back up here or if it's going to come here based on how much liquidity is over here. Again, intuition, just surface level stuff right now. I mean, yes and no, but this is still the foundations of it, right? And this is what we want to follow on. After we have that main trap, following all of the cells, when price pulls back from an SMT, identify your inducement, identify your mitigation, and then sell, keep selling low, because this, like we talked about yesterday, is going to be your main TP, right? In this scenario, you guys have all the examples from yesterday, how to manage them. Today, you're going to learn specifically how the positions, where they're going to be inside of it based on all of the different type 1, 2, and 3 scenarios for both buys and sells. So there's a lot of notes coming. Awesome. So this is the cell model. How's everyone feeling about this? Too much at the moment, overwhelmed. Yeah. There's a lot, everybody. If you're understanding this and be like, WTF is going on, I don't blame you. This did not happen overnight. It took me years to get to this point. This is the equivalent to tying a shoe for me, because I've seen this thousands of times. Your first time, don't expect it to make sense. If it's not making sense, congratulations. That's the purpose, right? That's why you're not going to be focusing on any of this. This is an algo boot camp, but where things are going to be changing going forward is this stuff isn't going to be taught on, during the actual boot camp. We're going to be making a new model, because all the things that need to know are on days 1 and 2, even partially 3, before even getting to this, because this is highly, highly, highly advanced. So okay, let's get some more comments. What are we feeling during this? I need to get a pool of where everyone feels, not just about if it's good or not, because honestly, I know it's good, but how are you guys feeling? Overwhelmed, stressed? Is it making sense? I want to know current and new students. Craig, what are you referring to wondering about stacking more positions?
Yeah, just in the diagram there, you've got like 3 positions there.
Mhm.
But obviously, a lot of the times when we see you stack positions, there's probably about
Exactly.
8 or 10. So that's what I'm sort of looking at.
8 or 10. You are definitely one of the more advanced individuals. This is just from a preliminary conceptual understanding, because at this point, you're right. When there's this one entry, this is what I want everyone to focus on. But myself, I will just enter once. I'll enter here, 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 here. And then after we get this next entry, here, 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 I'll take it to the next level. So yes, there are many entries, but from just a foundational standpoint, this is where it needs to happen. So you just asked that question. In the next 2 slides, I'm going to have an example showing you specifically, where I have several entries entered. Makes sense, and it combines everything.
Yeah. Okay.
Yeah.
Yeah, I agree with sir. I hope I'm not asking the question that's too forward. I was going to ask how you now do trade management when you are starting.
How do what?
Trade management. How do you manage your trade when you are?
Well, that's why the management for this, we're not even discussing until you guys are ready to become masterminds. And that's where talking about your journey, you guys are going to be starting with this. You guys aren't going to be starting with cycles. You guys are going to be starting from the core concepts and building your way up to these levels. So that's where like graduation, these different levels of classes are going to come into play. And you guys, I'm going to be talking about that all at the end of the day. So as far as management, no management is covered in this, because I'm not expecting anyone, and I sure as hell hope no one tries to do this right out of the gate, Because think about it. If you are on the wrong side of the market, if right here, like, oh, stack, 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 I want to go to here, and you don't want to manage your positions, guess what? You are just going to lose everything. So this is just a conceptual standpoint for you guys to reference in your notes for the future, because the inner circle of the community, this is all that I'm going to be teaching, trading, showing you guys on a specific daily basis, how I live trade, take my positions. And it's not going to be available to anyone in the low end, right? Because I've had people who, oh, I'm live trading, they max out, go full in a position that I won't even take, where I talk about, and they're like, oh, Griffin said it, it's going to go, so like that's where plans need to be set in stone before anyone even tries this approach, because it takes experience. I don't care how smart anyone in here is. We've had traders in here who have been trading 13 years and they still are like, this is absolutely crazy, the craziest thing they've seen. So it's not going to happen overnight, but my goal is to make and have you guys get to this point to where you're managing accounts and you want to trade like this. But again, when you're funded, when you have 200,000-300,000 in funding, in all honesty, when you become funded, it becomes very easy. Then it's just, shit, I don't need 3 entries. I just need 1 entry, a 1 to 6, 1 to 5. And there you go. You could have 6 to 10,000 just based on that, So that's where another level of psychology comes in. When you start making money, you start focusing less on perfection and focusing on what trading is actually about. And it's just making money. All right, so we are all good with this then, I'm assuming. All right, so as mentioned, we have a lot to go through today. I will be covering some examples of these, but again, this is primarily intraday mastery. I just wanted to be the dime that I am and share this with you guys and not set you guys up for failure, because this is a lot. So let's get right to it. All right, so the next one, the buy. Type 1 buys. I'm going to give everyone a minute to draw the chart to the right, and then I'm going to go over it again. Also, B and SMT, for right now, just say that they're the same things. Everyone type a 1 when you are ready or when you are done with the diagram, and I will begin. Again, once you're done, please type in the chat and I will begin explaining. To get more people, I will begin. Got 11 people out of 37. All right, 15, 16. Less than half. All right, guys, I'm gonna begin here in the next 10 seconds. All right, so let's get right into it, everybody. Okay. Now, again, do not worry if this is overwhelming you. It is supposed to. All right. So now we're going to look at the second or the first type for buys, right? So this type one occurs when we are in a previous uptrend, when we are in an uptrend, right? So again, what this is telling you, remember, two key points is that this over here that price mitigates is an SMT. This down here, we are following either some form of order flow or we are directionally bullish. So similarly, this applies the same, but essentially we are looking in an uptrend. This is a case where a type 2 or a type 1, inducement occurs where it breaks the same structure that we're looking at, right? So it tells us we're buying below a higher low. But where's the actual initiation point of the algo? Does it start here? No, the initiation point is right here. So whenever a higher high is taken out, this is always going to be the initiation point. Why is that? Well, because what can happen is price can just come in here, decide, and then go higher, which you're going to learn about a type 2. But it's the initiation point because different types of inducements can occur as a result of that. Now, being said, let's dive into the internal. When the SMT is mitigated on the higher time frame, we know this is going to be following some form of order flow. You have true order flow and you have SMT order flow. When you have SMT order flow mitigated, all that's saying is if we're bearish over here, it's not going to be making new lows. It can go anywhere internally. It can break structure. It can come inside and maintain it as for a type 2. But just be mindful. That's what I'm saying when I'm talking about SMTs. Now, when we're looking at SMT, order flow has been mitigated. We know that in the future, this will become another form of order flow, aka an SMT if it is counter trend. So always be mindful of that. That's oftentimes going to be left for the future. Now, internally, what you're going to see is you're going to see something like so. You are going to be seeing internal pullbacks, internal continuations, with all of these being SMTs, again, trapping buyers and then also trapping sellers. So there's really two instances of algo. Again, any move in the market is as a result of the algo, right? So, well, I'll try not to get too deep here. But yeah, so we have internal order flow developing. These are colored not as SMTs because respective to these individual time frames they're on, they're actually going to be making new lows, right? They're actually going to be making some form of new lows. Now, in the future, what happens is because this is valid order flow, as soon as price takes all of this out, now what happens is this order flow is SMT order flow internally. So if this is the initiation point, where is the actual transactional point? Well, the transactional point is going to be the inducement that tells us this is now where we're balanced. And again, the transactional point is when after the initiation point occurs, it's the equilibrium. It's the homeostasis where we have previous traders taken in one direction. Over here, in this case, it could be sellers. Over here, now we have buyers taken out. That is where the algo delivery comes into play. So after both parties are taken out in either direction, now we're ready to resume that main direction before repeating again. So now we have price coming lower into our actual order block. Again, it can be extreme or decisional. I can't do everything because there would be 15, 20 plus different models. But with that being said, of course, price comes down to our main order block. Can anyone tell me, based on our picture, where is our inducement for this trade? Where is our, let me go ahead and clear all these drawings. For this setup, right, specifically, where's the inducement for our buy model? Where's the inducement? The main inducement. Right? This is our main inducement right here. This is a small one, sure, but this is not really relevant because this is where the main one is. Because if this is a main higher low that makes a higher high, this is our main inducement. Of course, you see this is a fractal one, but this is the major one that we really want to pay attention to. So if this is the inducement, where is the trap? Go back to the steps for success. Where is the trap? Everybody, where is the trap? right? This is the trap. Now, the next thing I'm going to ask everybody, if this is the trap, the inducement, this is the trap, what is the third thing we now need to think about? It all rhymes. Induce, trap, then what? React. Induce, trap, react. So where are the SMTs we want to pay attention to? Boom. This SMT right here. And this one over here. Why these SMTs? Why are these SMTs? Well, again, they're SMTs because if we have to view this from a structural standpoint, where is the structure? Well, we can see within here internally, we have here, 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 right? BOS, internal BOS, another BOS. As far as the main structure, we have SMC trap here. This is a lower time frame extreme. This is a lower time frame decisional. As far as the main one, right? Our main BOS, which is actually an inducement. And again, why is this an inducement and not a BOS? There's one key point why this is an inducement and not a BOS. Why is that? How do we know if it's an inducement versus a BOS? Exactly, SMT. You guys got it right, right? SMT up here, that tells us if this is an SMT, we are going to be following where the real order block is, which is down here. That's how we know this is an inducement because it did not react from a true order block. If this was a true order block and we see this, then we know it's a BOS for the price to continue, but it's not in this case, right? So these are our SMTs to the right. Boom, come back, mitigate. We're going to have some form of pullback again. It can go higher to our next SMT. From there, it's going to come back to order flow and then to end up breaking the entire range. So again, for those who know what accumulation is, the whole like off, mark up, mark down, all of that, this is going to be your accumulation. This is going to be your reaccumulation. As soon as price takes out this, that's when we're going to start distributing and restart the whole cycle again. Awesome. So this is snow shot. Yep. Good. This is our type 1 model. Okay. With that being said, who have marked all this down? Are we ready to continue? To get 10 yeses, we're going to move on to the next. Again, the hardest part is the learning curve. After you learn everything, this becomes simple. But it sure right now it could seem like rocket science to some people, and do not feel discouraged. It's meant to be like that. You got it, Matthias. All right. Let's continue. Now, in this case, what I'm actually going to do is I'm going to skip a few slides so we can go through this quick example right here. I'm going to show you guys. Just so we can have a quick note, quick switch from this. Control copy. Take a look at this. Here. Let's think about this. Don't read all the annotations. Follow along with me. All right. In this model, let's say right here is our main order block. Let's say this is our main order block over here. And structurally, we have high, low, lower high, lower low. What type of inducement is this right here? What type of inducement is this if this is our structure? To type 1. This is our type 1 inducement. Where is our trap? Again, do not read these. Follow along with me. Where is our trap if this is the inducement? Boom. We now have our trap, which is right over here. The trap is a point that takes out and mitigates. This is our trap. After the trap, I want everyone to identify where are the SMTs. Boom, there could be 3 SMTs in this case. Love it. You guys are following along flawlessly. Awesome. Let's keep it going. All right. Clearing drawings now. So now that we have our traps, I'm going to illustrate our traps in purple. So where's our trap? Well, we could have one here. This remains unmitigated. So this is also, right, a whole trap. And then we have this all the way down here. Now we've identified the areas where price is going to pull back from. Okay. Now, after it's mitigated, we then wait for price to come to what? React from a trap. What do we see? We see price come back to the trap. It comes back to react. Where's the first area following order flow we should look to get in at? And only do one at a time, everybody. Only one at a time. Boom, right? Exactly. Let me just clear your guys' drawings. This is the first area. Why? Because we can clearly see that this area has been mitigated. This is the clear order block that mitigates it, takes out liquidity, has imbalance. Now, fractally speaking, where's the inducement that validates this order block? This sell one right here. Where's the inducement that validates it? And what type of inducement is this, everybody? Guys are killing it. Awesome. Clearing that up. 3. Here's our internal, right? So that's going to be our type 3 inducement that verifies this is the right order block. Confidence. Use it, right? After this is mitigated, what do we have price come back to? Where's our next SMT following order flow? Exactly. After the SMT is mitigated, where is price going to come back to if this has now been mitigated by here? Boom, that's another entry, right? Oh, there's no break of structure. There's no following order flow, right? Follows order flow. Awesome. After this is mitigated, where does price then go to? Well, it now breaks structure, takes out a new low. So if I had to ask everybody where, I know this is getting pretty cluttered, where's our new internal range? Where's our new internal range at this point? Remember, inducement validates a range. So where's the inducement within the range? Right? So if that's the inducement, that tells us this is our range right here. We have this. And how do we know this is the low and this isn't the low? Well, because we have an inducement internal. We have this. Boom, there's our inducement. Where is the order flow? This order block was mitigated, right? This order block was mitigated. Where? Right here. So where does our next order block become? Boom. Here's our order block. Here's our type 3 inducement. The inducement validates our order block. And what does price do? Comes all the way up to it. Now, again, when you are trading this precise, I have my stop losses set at parameters. I'm not going to take a stop on this. It never broke my order block. Came all the way to the exact high, but it never broke it, right? So this is another entry. And then what happens? All right, well then internally, if this is your new black structure, internally, you're going to have this for your red. Inducement, where's your internal BOS? Boom. Again, you guys see how intuition kind of takes over? Fractally, it makes sense, but you have to be able to be so precise to be able to see it this way. So there's your BOS. Then after that, where's your new order block? That's your BOS right here. Boom, that's your new order block. And then guess what happens? Order block's mitigated. Beautiful. Price pulls back, makes a new low. Where's your next order block? Boom, Mr. Villafuerte. Boom, right there. So that's what you have 1, 2, 3, 4, 5, 6. And then afterwards, you're like, well, order flow should come back up here. One thing you need to expect about order flow is it's going to be respected until it has a reason to drop. And why did it drop off here? Well, again, the next SMT is over here. So you're like, well, shit, how can I get it? Do I wait for this? Do I wait for this? How could I get in this? Wouldn't you like to know? Bogdan knows, but I ain't gonna go over that yet. I ain't gonna go over that. Hey. Yeah, but you guys will catch on. But do you guys see how this is the exact pattern that looks like this? Induce, trap. Trap makes main mitigation. And what do we do after that? Oh, here's our SMT. Here's our SMT. Boom, SMT. Then 3, 4, order flow, order flow, order flow. Start mixing new order flow, drop. Literally exactly like we have over here. Exactly what we have from a diagram perspective. Gabriel, no más. Shh. But yes, this is what you need to know. This is everything right here, right? It's algorithmic. This is what algo trading is. The same thing, because guess what? It just repeats inducement, trap, boom, 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 and then it's going to do the opposite thing. This is what makes structure. This is what makes structure. Because guess what? People are going to say, oh, this. But why does all of structure, why is it formed? It's formed because of all of the things we are teaching you, right? It's the most sophisticated learning experience anyone can have. That's why 4 days, it can't be taught. That's why there's a lifelong commitment to it. All right. So how are we feeling after taking a quick example, a quick look at this? Let's get some more. Let's get some more. Awesome. Understanding slow, hey, it's a slow process. If you can understand any of this after 3 days, 4 days, give yourself a pat on the back, right? If you can even understand some of this, good. You're not supposed to understand all this. And if you feel like you are, stellar. Again, when you are doing this, you're not using one time frame, you're using multiple because you can't just read one time frame. All right, so let's go back to here. All right. So what I'm gonna go through now is one more example, and we're just gonna do a type 2 example. All right. Everyone ready for a type 2 example? And then after that, we're gonna have another break. Oh, Craig, you said are using 1 minute or only 3 minute. I use 1 through the 5 minute. I'm never just on one time frame. That's something that's going to be taught is time frame agility and time frame adaptability. You cannot do this on one time frame because all the right order blocks are not on one, right? One could be on the 15 minute, one could be on the 30 minute. And that's what I'm going to show you guys when we get to the breakdown section of today, the setup rules, the approach. I have a whole chart laid out from an intraday perspective, tying in all of these concepts. Cool. Let's get in now to the type 2. We should all be ready. So type 2 for the cells. Identify this. I say identify. Write down all of this, everybody. You guys are going to have another minute to do this. So everyone is done writing this. Writing this. Type a 1. Type 1 in the chat when you guys are complete writing. All right. Let's see here. All right, get right to it then. How is this different, right? This is different because we are assuming the main range for our cells is going to remain intact. Now, key points from here. Remember, from the type 1 to type 2, the key difference is what, everyone? What is the key difference between type 1 and type 2? Wait till I get my money right. What is the main difference between type 1 and type 2? Well, besides the inducement. Structure points. Exactly. Internal, external structure, right? The difference is that the internal structure or the main structure for type 1 is broken, right? The main structure for type 1 is broken. And then it resumes. For type 2, the difference, right? The difference is that the main structure remains intact. A key point to both of these is what? The fact that it mitigates an SMT. That is without a doubt the most important thing to know. How do you know if structure is going to break, if it's going to resume cells? If this mitigates an SMT, it will end up being either a type 1, type 2, or type 3 for that matter. If this is a higher time frame, it will just be a pullback, whether it's up here, internal, to then continue. If this is a true order block, expect none of this to happen. It'll just reverse. Right? Two key differences. Being said, if we know that the structure is going to maintain, you guys can also tell from the anatomy of the algo, all of these points are included right in here. You have your inducement, you have your decisional, you have your extreme, and your engineered liquidity. We're looking at all of these, right? Where's the initiation point? The initiation point is not internal. The initiation point is what starts the algo. It calibrates a new setting, right? It's like here. It doesn't matter whatever trend you are. Why did this whole phase happen? Because it was initiated here. And because a new low was made, that's what initiated it for price to come back internally. Same thing over here. What initiates the algo? It's when a new low is broken, because it can either come up here for a type 1 or it can still follow this to go lower. So your initiation points are below lows and above highs. So after it's initiated, it mitigates your order block, your higher time frame SMT. We know that this is our engineered liquidity. We know that this is our inducement, because after we go external, when I say external, everyone, I just mean the main leg. When we make a new main leg, the inducement, whatever, whenever we go external of a range, we then need to come back internal. And internal are all those internal highs. After we come back external, this first point price must always come back to here. There can be an SMT. There might not. Again, case sensitive. It depends. You're going to know based on what price gives you. RTI. I just put the RTI is just return to the first inducement. That's just a little thing I just put in there. Again, that's the first internal point we must come back to after going external. So then, of course, take out liquidity. You're going to have your decisional lying just above it. Now, of course, it can just continue lower from your decisional, but how I drew these models was just based off of extremes. So remember, you have your false order block here, could cause a pullback. This is where you could have maybe a decisional, right? Your decisional that's mitigated, it's going to start order flow. The reason this is blue and not an SMT is because we're looking at this as an individual structure range. It will break a new high, right? Because this is internal structure, it will break it. And the reason why these are then called SMTs, because this will not make a new high relevant or relative to this structure. It'll just cause a pullback to then continue to go lower, right? So as soon as we have our engineer liquidity taken, if this is the initiation point, where is our transactional point, right? Our transactional point, again, case sensitive for purposes, don't put this in here, but transactional point is always going to be your inducement that's going to switch it over. Here, the transactional point, this is the absolute furthest, which is the engineered liquidity, which price can take. So again, your transactional point is going to be the actual setup you're looking for, type 1, 2, 3. After it comes up and it mitigates, it's just rinse and repeat. This is your inducement. This is your trap. We're following directional order flow. That is valid. So then expect what? Oh, here's my new order block. Price can't come up to here, but how are you going to know if it's going to come up to here and drop lower, or if it's going to just continue to go lower from here? It's going to depend the wall to the left. If there is a wall like this, expect this to happen. If there is not a wall, and maybe there's just a wall, you know, right here, but all of this, we still have imbalance, you can expect it to have some more gradual, you know, moves. So as soon as price comes to mitigate order flow, will drop, establish new internal order flow to then continue. When everyone's done with this, please type a 1 in the chat, and we're going to continue to the buy, and then we are going to be moving on, taking a break. Yeah, I'm assuming everyone's done at this point. All right, we are going to continue. All right, go ahead and draw this down, everyone. Again, another 45 seconds or so. Shouldn't take you any longer to do that. Again, it does not have to be exact. If you're using colors, great, but it's more important about the concept because, again, this will happen, but it can always differ a little bit. SMT can be over here. It doesn't have to be here. This is just it's just the most routine thing that will happen, the highest probability. And if you notice yesterday with all those setups that I gave you guys, it follows the exact setups, right? Follows the setups, but it gives you a much more detailed approach to them. Yeah. Looks like we got Eskimo in the chat. Some living in an igloo. Earl wearing a fur coat inside.
This is my trading coat, yeah.
Yeah, making it rain. All right. All right, everyone, let's go through it again. Where is the initiation point of this? Initiation point, very, very distinct. Initiation point right here. Initiation point, whenever a high is taken out. The reason we always identify inducement, again, is to ensure by selling above the structure point, if we decided to sell here, and even if you thought this was a correct order block, ignoring the whole diagram for a second, even when you identify an order block and it might be an SMT you're selling from, that doesn't mean you're going to fail, right? Because from the operations and the order of operations of the algo is liquidity, right? So after you take out a high, even if you get in an SMT here, you need to have confidence that it's still going to come down here. I mean, that's just what it comes to. So you will still be able to break even. You're still going to be able to manage your position. So when it comes to losses, something everyone wants to ask, well, how many losses do you have? What's your loss rate? In all honesty, I don't know, and I don't give a shit, right? Because my profits exponentially outweigh any loss. But any loss that you take, know that you always have a conscious decision, either A, to be willing to take that loss, because you know it can come back. For me, anytime that I lose, it's only for one reason. I'm willing to take the loss. For instance, I always, as yesterday, I outlined all of the exact entries, everything I do. If I take a loss, it's normally because of something like this. When price comes back and mitigates, right, it'll end up going higher. Here, I know that at this point, I'll break even, but if price decides to come back here and we're at maybe an SMT, I know that it can just come back down here. So then at this point, I'll remove my stop loss because I know it can induce to go higher. So what I do is rather than just moving to break even, I'll just move my stop loss back to where it was. And even though I had an opportunity to break even, it'll do something like this. Then it could take out and then go higher, right? So this is the only time I'll take a loss, but it's because I was willing to take the loss and especially could have been avoided. But for me, I don't, again, hey, I'm used to setbacks. I'm used to failure. I've become a master at managing that shit, you know? So like, that's my own little flex. I do not care because wins astronomical. If I had to say compared wins to loss ratio, I couldn't tell you, but I can certainly tell you the break even to loss ratio. I would say out of 10 times, you should be able to break even 6, 7 at least out of those 10 at a maximum 4 losses, really 3 or less. But that just comes down to your personal preference. If you want to break even and not take a loss, your loss rate is going to be, or your win rate's going to even be higher. So if I had to say my win rate, I would say 70% and above, which for this edge, phenomenal. But when I do take a loss, it's like, okay, whatever it's worth. But don't confuse your win rate with your profitability, because the higher your risk reward, the less your win rate needs to be. With our edge, if you get a 1 to 6, 1 to 7 at an absolute minimum, you know, you need a 25, 30% win rate to be profitable. If you're doing that 1 to 7 at the minimum, but you're getting 1 to 15s, 1 to 20s, and you have a 70% win rate, I mean, a loss is just shit in the bucket, right? It doesn't matter. So that's what you guys are going to be learning. If, I have a fear of losing, don't worry. As long as you can manage your positions, your account's going to be exponentially growing. It doesn't matter, right? So with that being said, getting back on track to this, I love talking not just about this, but I love talking more so about the conceptuals, the psychology, which is stuff that I don't really get to talk about much because everyone's always trying to master this stuff, which is important. But here, right? So type 2, this is the initiation point. This is what tells us we're ready now to return back to homeostasis. If this is an SMT, we know it could either come down to here to be a type 1, or if this is following order flow with confidence, you can know that this is going to be the right order block. So where's your engineered liquidity? Exactly as the diagrams, boom, here. It'll pick up after an imbalance, and then it'll start mitigating some form of order flow afterwards. The whole reason this move happened, again, is it was artificially engineered, aka it's unsupported, because the whole purpose was to break the range so this could be collected internally. Again, taking it a step further, can anyone tell me specifically not why this is here, but how we will actually end up using this, not for the future, but what are we going to be doing in this period of time over here while this is occurring, before any of this happens? Can anyone tell me what we're at?
Buy avec order flow.
Bingo. Exactly, right? This is order flow. So that's exactly here. We might say, oh, it doesn't mitigate. This doesn't mitigate anything. On the higher time frame, it won't. But guess what? Right here, it can mitigate just a 1 minute. This could not sweep anything. It'll then mitigate a 1 minute. And then after there, it'll do this, then this, and then this. So because these are all of our entries, you need to know as soon as price takes out this, these are phenomenal scale-ins, but where does price now need to come back to at the minimum? Well, this for sure at the minimum, but Specifically, where's the engineered liquidity? Bingo was the name, all right? So now if we know this is where we get in, oh shit, there's another SMT above here. Or maybe it's a correct directional order block. Because again, fractally, it just becomes the same crap over and over and over again, right? Oh, here's our main order block. Well, I guess I should probably take my position out. You take out, guess what? Here's our engineered liquidity. Here's what prices come back to. What are these? SMTs. Rinse and repeat. Oh, comes back to your order flow. Oh, it's going to come down. Oh, it randomly stopped. Is it going to go higher now? This is all, again, if this is all a wall, order flow. Order flow, and then guess what? Boom, then it can come all the way down. Algorithmic, cyclical. And guess what? All of this is just happening. Maybe all of this could be happening just inside of here. It's all fractal. And once you have a true mastery of fractality, that's when your perspective is going to completely change. Like, holy shit, like I'm just doing the same thing within something else on a smaller level. All right. And that's it, everyone. So as soon as it comes down, where is your type 2 inducement? Boom, that's your type 2. Keynote, when you have a type 2 inducement, oftentimes you're going to have, again, when you have a type 2 inducement, let's say this is your type 2 right here. You're also going to have a double confirmation of a type 3. What do I mean by that? Well, within here, you could have this. So you could take out a type 3 and then a type 2. That's double confirmation bullseye for then you to be looking for this. This is just another pro tip that you can jot in your notes. Whenever you have a type 2 inducement, it will be majority of the time taking out a type 3 as well. How are we doing, everybody? Good, good, good. Sleepy, tired? No, you guys are awake. Processing. Robot. Good. Processando. All right. Good. Good, everybody. All right. Well, I think in that case, are you guys ready for your break? Ready for your mid-noon break? Or after noon? Jesus, sorry, 1 o'clock day's blown by for me. All right. If you guys are ready for your break, then go ahead. You guys will have 15 minutes. And when you guys come back, we will be ready for the second half of today. Well, most likely the lesser half, because this is the majority. So go ahead, enjoy, step away. And we will, we'll actually do 17 minutes on the dot right now, because that makes it 1:15 p.m. So you guys have 17 minutes, come back refreshed. We'll be ready to go and dive right through the last half. Have a great break, and I will see you guys shortly. So let's go ahead and be active. So let's go ahead. All right, everyone, go ahead and return to your seats. We have some people waiting in the waiting room. We're going to be admitting them in over the next course of a minute or so. Again, people will be removed. We're not active. So let's go ahead and be active, fly through the next couple sections, get to the charts, and then wrap up to Q&A beforehand. Of course, going through, your journey, what that looks like after the bootcamp.
We've got a couple of you guys still away from your computers, just camera. Please show your face in the next 5-10 seconds, or else you'll be placed in the waiting room. Gabrielle, are you there? Reteeth, are you there? Is that your... Okay, waiting room for you.
Ready to go here in the next minute, guys. Just please comply and be ready to roll here momentarily.
Hooten, are you there? If you're there, please turn your camera on. Thank you. One quick final check. Hugo, are you there, Hugo? Okay, waiting room for you. And girlfriend, I believe. Let me just take. Okay, we're ready.
All right, just a moment, and we will go ahead and get started. In the meantime, everyone, I'd love to see in the chat, what's your favorite thing so far that you've learned throughout this bootcamp? New, old students, love to see it. Let's see. Let's get some people going in the chat, and we will be starting immediately thereafter. All right. Inducement, mastermind approach. Some excitement going. Points for setups, road mapping, SMC is the SMT. Remain built exactly. Properly marking out structure, then everything else is built upon it. Close. Everything's good. Reinforcement of steps. Everything. TH logical approach. I'm glad. Awesome. All right. Well, let's go ahead and get started with our second section of today. The first half should be the first half of the section rather should be pretty straightforward. Right. So now we are finally going to be getting into the intraday mastery. Right. So this is where you're going to have all those external confluences come into play, but they're all going to be centralized around the algo, all the same concepts. Now you're just going to be applying timing, some different variations to help you identify these setups a little bit better and make it manageable. And this is where, intraday trading really becomes, you can make it very simplistic once you know everything. And this is where, even from a timing perspective, you're going to be able to understand the purpose of fractality much. You're just going to have a deeper understanding of it, right? Because compared to what, we've been talking about this whole time, when it comes to, here's our structure, identify the inducement. Great. Sure. This is great. But what's actually going to help you put into perspective what's attainable on a daily basis is by viewing it from an intraday perspective. Right now, I know that majority of us are intraday traders, which is phenomenal. We might have some swing traders. All right, it works the same exact way, right? But when you're viewing it from an intraday perspective, maybe it could look something like this. You could have this, and then maybe your days are going to be separated. And what makes intraday trading easier is because rather than dealing just with the whole chart, you're cutting it into manageable days by price action. So depending on the day, depending on the week, depending on a whole bunch of things, you're now able to remain much more focused. With me, I have ADD. So that's whenever I go off the walls, I talk about random stuff. For intraday, just so you guys can put it in perspective, you have so much information. But when you can apply it just on a daily basis, and now all of a sudden blocks out all the noise, you're able just to focus on, all right, what are we doing today? What is going to be the purpose? Why, what serves as the guide for the day? What are other confluences such as timing that I can start to tie into my analysis to make it all the more probable, right? Or easier to understand. Because when you can break it down into these manageable chunks, then you're able to say, oh, well, damn, I know this is an inducement. I just wait for time and then I reverse. Makes it so much easier. So I'm excited now to finally say we are finally done with the core piece of the education. Now we're going to be diving right into the intraday mastery. Now I understand why you keep saying master. I never knew you were an alien until the day, bro. Chart alien. Yeah. Appreciate that, Sean. Okay. Becoming a mastermind. Again, mastermind, what you just said, mastermind. From analysis standpoint, sure. A mastermind, though, is controlling your mind to conquer your life, conquering your mind to conquer your life. That's all psychology. That's where I effing thrive. Besides the analysis is psychology. And that's later on education for all of you. All right. So let's get right to it. So in this section, you guys can expect to master the second dimension of trading, which is time. Become a master intraday trader with all the concepts you've already learned, now applying them on a daily basis. Understand the importance of session timings, the routine daily intraday setups that provide 115 RR plus on a daily basis. I can confidently tell you, you're going to learn very quickly why I love trading London. Is it ideal for my time zone? Absolutely not. I'm in East Coast. That's 3 a.m. my time, but I want it more than anyone else. So I don't care about being up early, staying up late. Sleep and me aren't friends, but me and money, I'm married to the money, right? That's what I'm about. Always comes a sacrifice. So you guys are going to learn how to apply all of these concepts, and specifically why London might be a better choice for some of you guys, especially those international. Even the US, you can still make do phenomenally with New York. And of course, applying all the ALGO concepts on each fractal level every single day. All right, so intraday mastery, session timings plus importance. This should be review for most of you guys, but there are some key things that might be new to you. So it's important to stay alert, stay attentive. All right. So time and price, mastering the second dimension of trading. Time versus price. What is it? Understanding that all the concepts that you guys have learned about the algo, right? All of those key pillars, steps to success, induce, trap, react, order flow, reverse target, everything is very, very important. That's the foundation. However, right, obviously, what if we know you could happen? What if you knew you could happen when these things would happen on a daily, on a weekly basis, right? This is what you guys are going to be learning today. Price is just the first dimension of trading. As we previously said, the day one, day two, price doesn't know time and time doesn't know price. They work together, but they don't know one another individually. There's no rhyme or reason why sudden things happen at sudden or apparent times. And this is where trading, the matrix, and life being a matrix, you can understand there's no such thing as randomness, absolutely zero. If the markets take off all the way up or all the way down, there's always a catalyst. There's always a reason, right? Even though you might not know the reason, it's always going to be there. Just like in life. How many times has maybe something terrible happened in your life and maybe you were only able to see why it happened and it helped you get to the point to where you are now? Might be, relationship. You really love the person and, you lost, like, this is so depressing. And then afterwards, you'd be like, damn, had I not gone through that relationship, I wouldn't have met my significant other now. Maybe that can maybe some people can understand what I'm saying. Only specific things happen at specific times, even though you may not know the reason. And trading is no different. Something needs to happen for something else. It's all a part of a bigger plan. So when the time is right, price will align as well. When the time is right in your life, that's where trading, if you know everything you've taken and you've trusted the process, overnight, you're just going to start attracting all the money, all the success, all the good things, but it didn't happen overnight. It happened because you were ready, in your headspace, you were ready to take on those new challenges, take on, those new things that were coming in your life. So I always like to make little analogies like that because it's all a matrix, everything is. You just have to be able to develop a perspective to think outside of it, right? So they're two separate entities, dimensions. They don't know one another, but they are constantly working together. At this point, we know about, London, New York, Asia, so on and so forth, but that is still very surface level. It gets even deeper than that, right? So let's go ahead and explore this a little bit more. So time and price delivery, session and intro, right? The first session that we have is Sydney session. Now, specifically, this is the first session that literally resets the algo at 4 p.m. to 6 p.m. EST or 00 GMT open, right? This is from a timing perspective when the algo is reset. Now, algo timings, that is nothing we're going to be talking about today. Those are things that I use as additional confluences, and some of you guys might already know them. They are not important. They're not relevant to this moment in time because we have, honestly, a lot more things to go through. So that's going to be later on in the course you guys will be learning. But again, fraction of a percent that it even matters, okay? So going into that, these are all timings in EST. Thank you for making that little note. EST, so you're going to have to make your conversions. This is Eastern Standard, So with that being said, Sydney session, these candles formed during the session are small and shy. Most of the times, they don't have any structural point formed during this section. They're just, small vector candles. They're just going back and forth, right? Calibrating to reset the algo from a timing perspective for the next day. Asia session is what we primarily care about. Now, there's specific sessions within Asia, but me personally, I categorize anything from 5 p.m. till 2 a.m. EST to be Asia session. It all has the same purpose. It's just either going to be building liquidity or, setting up a move for the next day to happen. All right. So Sydney session, I wouldn't worry about this too much, straight to the point. Asia session, Tokyo. Yes, I would definitely be referencing this. This is our build up phase or our consolidating phase most of the times, where we can expect the first wave of retail traders to be entering the market. They're going to be providing the liquidity for our next three principal trading sessions where the real institutional injections are most likely to happen. Understanding the anatomy of Asia phase is crucial for us to understand the best European session entries. Another 10 seconds and we will continue. All right. So now we are going to go on to the next. European setup. Asia session. Going right into now Frankfurt. Frankfurt, our beloved those in Germany, right? This is from 2 a.m. to 3 a.m. EST. This is the 1 hour session before London. This is the shortest session of the day, being an hour before London starts, which is at 3 a.m. And Frankfurt is also typically seen as a minor build-up phase. During this phase, it will also be building liquidity in the opposite direction for the main, right? And you guys are going to have a whole schematic showing you guys this exact approach. Frankfurt session is before London. And typically during that time, there's going to be a trend in one direction, right? If we have Asia here going back and forth, right? Oh, here's Asia. Well, then what Frankfurt's typically going to do is it will just continue a trend outside of Asia. So that by the time we have the next session open, which is London, if this is Frankfurt here, by the time London opens, what is everyone thinking at this point in time? What is everyone thinking here, everybody? If during Frankfurt they're seeing sells, what do you think the first thought process for Asia session is going to be? Exactly. They're going to be thinking more sells. Oh, well, it's still selling down. We want to now continue lower. That's typically what they're going to think, but that's not what's going to happen, right? So during Frankfurt session, it's just going to continue to build liquidity, right? And what we can typically expect during Frankfurt is it's going to build all the liquidity. So by the time London comes around, London can then just suddenly reverse and go the opposite direction. So this is typically what's going to happen during Frankfurt. It's just going to be building more liquidity. However, two important points. Make sure to write this down on the slide besides the timing. The first option it can do, Frankfurt, is it can build up trendline liquidity, and then during open, price will reverse. That's what we have indicated here. The second option that Frankfurt can do is it can, again, if this is your Asia session, I'm just trying to illustrate right here, it'll be the same thing, right? This is Asia. Asia can be trending, but then what also can happen during Frankfurt is that it can actually make the main mitigation. Again, Frankfurt, if this is Frankfurt right here, Frankfurt can actually make the main mitigation. And then by the time London comes around, if this is London, London can then actually continue from Frankfurt. So Frankfurt can either be building liquidity for London to reverse, or Frankfurt can make the main mitigation, which London will continue. So continuation can happen during Frankfurt for London to reverse, or Frankfurt can make the main mitigation for then London to continue. And you guys will have drawings for these. Does everyone have that written down? We're ready to go on to the next. Again, let me know when you guys are ready to continue. We have quite the amount of examples to go through, as promised. See, yes. Grazie. All right, let's go. The next session, London. Specific points here in white. This is the timing of London. London opens at 3 a.m. EST. London opens at 3 a.m. EST, and London close is at 11 a.m. EST. Both of these points crucial to remember, crucial to write down. London open, right? London close, specifically London close, make a point that when London closes at 11 a.m. EST, this is where price can reverse. Make a side note, when London closes, that's where price can reverse. Below, we have the kill zone. Majority of you guys should be familiar with the kill zone, nothing that I came up with. It's been around. I've been using kill zone since 2018 from no other than Michael Huddleston. So kill zone, right? We should all know what the kill zone is. Kill zone is the 2-hour window during London where routinely majority of the main move of that session should occur. Now, it's not a rule. It's just, it's just kind of known, I guess, we should say. Why is that? 3:30 a.m., right, is 30 minutes after it opens, right? After London session opens. Majority of people might expect that the move to happen at 3 a.m. Sometimes it can, but if it doesn't, it can happen at 3:30 a.m., which is 30 minutes later. The kill zone ends at 5:30. So that means, guys, for your kill zones, that's really the period of time you want to be on the charts. So after I go through London, I'm going to give you guys my specific range to be trading, but you have to know all these first. So I'm just going to add a quick note in here. I'm going to illustrate. All right. So that's a kill zone till 5:30. Magic minutes is the 1 hour in the middle, smack dab in the middle of the kill zone. Magic minutes is essentially trap timing. Trap time. So this happens at 4:30 a.m. EST. What is trap timing? Let's say over here, right? Let's say this is where Asia session is. Let's say we mitigated an order block to the left, following a diagram. And let's say right over here, we're going to have some form of order block. Specifically, everybody, what type of order block will this be? SMT. It'll be an SMT, right? This will be an SMT order block. So if this is an SMT, just put S here. This is an SMT. And at this point, let's say it's 3:30. What do you think traders are going to be thinking at this period of time? If it's 3:30, oh, it's in my demand zone. It's in my order block. We have a high, higher low, higher high. What are they thinking during this period of time? If it's 3:30. Boom, we have a demand zone. We have the timing. This is the holy grail. This is the best trade. Well, what's going to happen during this is 3:30, price could do this. Oh my God, it's going up. I'm at all these positions. Let's now say trap timing comes along. Lucky old trap timing. Let's say it's now 4:30. What are we going to be looking for? Trevor, why are we looking for sells? Exactly, right? 4:30 comes around. Boom, trap timing. We've already trapped everyone. And again, the inducement, the trap, everyone's like, oh, we're going to buy. Nope. 430 comes around along. We now find our order block up here. And guess what, everybody? We know we're going to go for the remainder of the session, right? Boom, we're going to be going lower, targeting the inducement that lies at the SMT. So this is what trap timing is. Everyone, I would highly encourage you, write and make this exact picture down. Draw this down to the T, because oftentimes students forget what does trap timing look like? What does it look like? I would draw verbatim this down. So I'm going to give you guys 20 seconds or so. Here you're going to put SMT, true order block. You want to put 330 here. It was mitigated, 430 here. When we're done with that, type 1, and then I will reveal the notes. I'm just waiting for that one person to type 1 in 1 second. There you go. Okay. I guess we all have flash in the air. Okay. Let's get right to it then. Right. So London session, we know this is the first major session of the day. It's typically what's going to happen typically during London is it's going to have a large fake out in one direction, aka when the banks open. Think about it. When the banks open right at 3 a.m., what's actually happening? All of the orders are now coming into the market. Timing has finally released, and a shit ton of liquidity is getting injected into the markets. So when a ton of liquidity or a ton of money is getting injected into the markets, and let's say this is where price currently is, when the banks open, where do you think all the orders are going to go to? Where do you think when the banks open, what do you think they're going to cause, right? Well, they're either going to have an influx of buys or an influx of sells, and you're going to know which way depending on where your inducements are, right? Because in order to go lower, you need to go higher. So this is what's happening. 3 a.m. Oh, the banks are opening. Bing, bing, bing. As soon as the banks open, what's everyone thinking? Oh my God, it's the hint for the day. I'm going to be buying. They're all going to be trapped in here. And then what happens is after that first, 10, 15 minutes, whatever it might be, then, oh, it's consolidating. Oh, it's at a break and retest. It's now going to take off. Then it'll just do this, take all the way down. So this during London Open is typically what can happen. And that's why we said Frankfurt can build up liquidity. London can trap everyone to believing that the direction is going to continue, but then a short period afterwards, it'll end up reversing. So session openings and news all have the same impact. I love when news happens. Absolutely. The only part I despise about it is effing spread. But I love news. It's how you make the most money the quickest to me. I don't like it's the best. But again, this is also going to be based on daily cycle scenarios, right? The preferred setups happen during London as it is our prime opportunity of the day where we take trades solely based off of Asia and Frankfurt liquidity. This is why London is my favorite session, because it is so easy. It is literally the same thing every single day, as there's only a handful of things that can happen, right? It's not like there's endless things. There's only a finite amount of options. So, it's going to be repetitive, always the same thing. However, just like Frankfurt, it is important to note that there will be times where London can continue Frankfurt's trend instead of reversing it. Even though we always say, oh, London's going to create the main breakout and then reverse. That's a typical BTMM model. For those who don't know, BTMM, what is it? Beat the market maker back in 2018. Part of it, it's just a whole daily cycle scenario. You have the Asia buildup, right? You then have the London breakout, and then you have the reverse, and then New York reversal. That's just a typical model, but that's not a rule. Anything can happen, right? So like we did for Frankfurt, if you have your main session for Asia, and then let's say, structurally speaking, you have maybe an order block somewhere up here. Well, what can happen? Sorry, everybody, hold on. What can happen during Frankfurt again is Frankfurt can be just building up liquidity. And then if this is your right order block over here, here London can happen. London can just start to inject a ton of liquidity with the banks opening. You can do something like this. Inject, come all the way into your order block. And then it can reverse, right? So that's the typical model that we want to see. Build up, mitigation, reverse. But what can also happen is, let's say that this is Frankfurt right here. If Frankfurt instead makes the main mitigation and then does this, when London opens, where do you think London is going to go? If it already made the mitigation, how do you think we could get in if this is London? Exactly. Take out gas, mitigate Frankfurt, and then go lower. So just be mindful of those two things. It can either continue Frankfurt or it'll reverse Frankfurt. All right, comprende? We all understand? Let's get ones in the chat if we are already clear. Nothing confusing. Awesome. All right, good stuff. All right, so let's go on to the next one. Lovely New York session, right? So similarly to London session, New York session has its own kill zone. Now, New York session, again, it opens at 8 a.m. and closes, again, for me, you can say 2 p.m. I just consider anything until 5 p.m., you know, New York. I don't get too in depth. Oh, it's Sydney, you know, until 4 p.m., right? So let's just say 8 a.m. to 4 p.m. is New York. The reason why 2 p.m. for me is such a powerful time, can anyone maybe guess why 2 p.m. is a relevant time for me, or why you might look for maybe a trade around 2 p.m.? There's one specific reason economically. Lunch, I mean, lunch could be one, but New York Stock Exchange, close. Mateus hit it right on the spot. News, FOMC, 2 p.m. Better believe that's the only time I'm outside trading outside of my trading hours, because I love news. That's the only time I'll break my plan, is when news comes along. Again, I've been doing this for years. If you can't master concepts, don't dare trade news, right? That's just completely different. Management, XYZ. But that's the only time I'd ever take a trade in the afternoon, is around 2 p.m. when you have news released. With that being said, right, 8 a.m., 2 p.m., your kill zone is going to be the same thing. Kill zone is 30 minutes. It starts 30 minutes after New York opens, and it ends 30 minutes before London close. Coincidence? Not really. No such thing. So that's where you look. So in relation to what I said about London session, okay? Your London session, my timing that I trade every single day for London session is, and if you guys want to put this in your notes to make it part of your trading plan, go for it. I do not trade Frankfurt. I do not trade Frankfurt. When I first get on the charts, I get on the charts at 2:30 a.m. EST. That's 30 minutes before London opens. And that's the first time I would even consider taking a trade, nothing beforehand, right? You have to follow a plan, be consistent. 2:30 a.m. EST is when I would start analysis, or even at earliest take a trade for London session. The latest time I would take a trade is 5:30. If it's a minute later, I don't even look at it, right? So I have a 3-hour window where I'm going to be on the charts. Now, with that being said, do you have to do that? No. If you don't do that, I would do 3 a.m. EST when London opens to the kill zone close. So it's 2.5 hours. So at any given point, you should not be on the charts longer than 2.5, 3 hours for any given session. If you are, you will overtrade. You will lose a lot of money, because psychologically, no matter who you are, you're going to be much more inclined to take a position if you're sitting at a computer at a time you should not even be looking at the charts, right? I mean, can't tell me I'm wrong, because that happens with so many people. I just want to watch how price develops. No, you don't. You're just going to enter because you can't wait. You're watching it, right? So always stay at the charts no longer than 2.5, 3 hours. Magic minutes, again, it's the hour period after the kill zone, before the kill zone close. Magic minutes, again, just like London, is going to be the trap. It's the trap. Everyone says, oh, the main moves need to happen at 8:30. Oh my God, it's 8:30. Here's my order block. Here's the main move. You know, it's Christmas. Again, here, let's say here's 8:30. Oh my God, it's perfect. 8:30. Beautiful. Let's say it gets to here. And now it's 9:30. Or let's say it's 9:30, or the trap timing. Right here. Are we going to buy or are we going to sell? And how do we know? Besides time. Are we going to go lower or are we going to go higher at trap timing? All right, this is an SMT. No, not that this is an SMT. This is the SMT, right? And how would you know that this is the SMT here? What would tell you that this is the SMT? Annotate. How do we know this is the SMT? Beautiful, Mr. Ducati and the other person. Besides timing, you can't just have time and not price a line, right? The time tells you, sure, but what tells you if this is an SMT is if you have the true order block over here. Again, fractal. Got to be able to put the missing pieces together, even if you don't have the puzzle, because you already know what you're looking for. If you can do this without even thinking about it, you're great. How do you know this is an SMT? Because it mitigated a true order block and timing align. Now I know we're going to the moon. Remember, that's the only way. Timing alone will not benefit you anyway. As you just saw, 8:30 order block. Doesn't matter if the narrative isn't there. So again, New York session is the second largest session of the day, where price will either reverse or continue London's trend. Two important points there. Like London can continue Frankfurt or it can reverse Frankfurt. New York can do the same. It can either reverse or continue London's trend. It's important to note that New York will typically reverse London's trend to create the lower high of the day, but as we illustrated up here, it can also continue London's trend and create the trap of the session. So what do I mean by this? Give me a second, I'll be done. When you're done writing out all this, just go ahead and type a 1 in the chat so I can see where everyone is. Then we can almost fly through. I'm just making this up as we go. Let's see. We have this. We have this. And now let's say in here we have lovely old Asia. Good. So if this is Asia session, let's say this is Frankfurt. Let's say this is Frankfurt, and now London is opening. What do you think we can expect to happen during London? Boom, right? We could have used Frankfurt as an inducement. Boom, the bank's opening, take out a whole bunch of liquidity. And then guess what? If this is London open, then we could have something that looks like this. Well, if this becomes our target, right? Where are the counter inducements? Well, where is the first counter inducement? Sometimes it, right? So this is London, and we know this is where we are. Guess what? We can be focusing on sells. Here is the inducement, the trap, and then what do we follow afterwards? Thank you, Nanette. You got it perfectly, right? This is a type 2 inducement, right? So you could really be targeting Asia low in this instance. Why Asia low? Because after you create that trap, right? After you create the trap, then what do? Order flow. We're going to have a wall over here, right? So then if price has a pullback, we can just come back to here, right? Oh, here's another entry. And then guess what? Here now is maybe, this was all of London session. Now maybe New York is starting. Maybe New York. And guess what? You could have an order block here. But if we are structurally bearish, what type of order block is this going to be? It's an SMT. So then in this case, everybody, what do you guys think that we could, what do you think is going to be the option here? This is an SMT and we change our color to green for New York. If this is where New York is opening, oh, here's the open. Oh my God, we're going to go higher. Based on what you guys know, where do you think that the next order block, the next 2 order blocks would be? Beautiful, right? Because order flow is intact here. And it's intact right here. In order for this to be valid, what do we need to see? Again, you know the concepts, now I'm putting it to the test. Abstractly, you guys will be able to think about it. Luis, you said that you're very confused or putting it together. I think you are solid. You are sharp. Love it, right? Exactly. For this to happen, you need to see some form of inducement. Oh, here. Bingo. You have your kill zone. You have your kill eye. This could be 8 a.m. This could be 9:30. Oh, here comes trap timing. And then guess where you're targeting? For sure here, but then ideally here, right? So then, oh, here comes another pullback. Sell. This is how you can build a high quality narrative just based on timing alone. And this is all just in one day. So how do you know if New York is going to reverse or if it's going to continue London? In this case, New York continued London. Why? Because that's what price wanted it to. And timing just happened to so perfectly, coincidentally, line up with price, right? So when you have the confluence of time, that makes things so much clearer. Even if you do know the timing, right? I guarantee you when apply even the timing that you already knew, combined with all these new concepts and this new way of thinking, your whole analysis is going to become so much more precise because it is down to the T. You're covering both dimension of trading. You're covering all the logic from an analytical standpoint, all the logic from, you know, the timing portion, combining it. That is where this becomes the highest probability, the highest edge, I mean, ever, right? And that's where you're going to be able to take it to the next level. So applying it on an intraday basis becomes very straightforward, right? Even though, again, still conceptual. So, oh, this is diagram, not charts. It is the same thing. If you can master this, the charts become breeze because then you don't have to worry about what's an inducement, what's this, what's that. I would 10 times over say master the diagrams, understand them, then go to the charts. Because when you're on the charts, then you can just focus on the candles, making it look just exactly like the diagrams. But if you don't understand the diagrams and you go to the charts, it's going to be like it's a foreign language. Cool. All right. I know we're about to go through all the different models, which will make it even better. But again, guys, how are we feeling right now? This is going to be the most time consuming, this portion, and then we're going to fly on to all the examples. Just get some answers. I'm going to get some feedback from y'all. Cool. Love it. I just want to make sure we're all on the same page. Majority. Awesome, everyone. Now it's time for us to go right into intraday mastery. So as far as breaks, just so you guys know, I would say we have about another hour. We're going to get through this session for this section. We're then going to take one more break, and then we're going to go on to the Q&A, your next steps to success, talking about the journey to the mastermind, everything you can expect for next week. For current and new students, that is so important. There are going to be some new announcements to the current community. Everything is going to be changed. So stay tuned for that. All right. Hitting the nail on the head. Awesome. All right. Intraday mastery. Let's get right to it. The fun stuff. Get your notes out because it is time to keep writing. Asia session. Why do we trust Asia session as our guide? Significance. That's why. Asia session is the lowest volume session of the day where most participants aren't involved, right? It's just one session. It's just Tokyo. Asia builds liquidity on both sides of the market and sets up intraday opportunities for London and New York. Oftentimes, these setups are going to be most easily identified during London. So to know what's going to happen during New York, you have to understand what London's purpose was. Did London mitigate the main move after Asia so then New York can continue it? Or did London just build liquidity for New York to take out? You always have to have this constant, your subconscious always has to be questioning things. What is the why? What is the why? Because if you know the why, you then know the when, the where, the how, the what, everything that goes along with it. Understand that breakout traders, from a very basic standpoint, have stop orders placed above Asia high, Asia low. Again, dumb traders. Oh, if Asia high breaks, it's going to go higher. Makes sense to them, but it makes that's not actual logic based on operations. Asia does not always have to be a horizontal range. It can also trend. Very important. How many times do you guys look for Asia? Oh, it's just going to build liquidity both sides. It's just going to have stop losses above, below. It's just going to look perfectly like this. No. Why doesn't it look like this? Should be the first question you want to ask. Well, why? Because there is a deeper meaning to when Asia trends. If Asia's trending, there is a purpose. Why would Asia be trending? Because there's nothing for it to stop. Always a purpose. Asia will routinely move with currencies that are active during that time. For instance, you're going to have, yes, USD pairs, GU, for instance, right? GU is going to be active during London, right? Because it's British pound. Also, it's going to be active during New York. So the currencies that go with their respective sessions are going to move. Asia, GJ will move a lot because it's Tokyo session. It's a yen, right? You also then have, gold. Gold oftentimes can move during session. It's just currency correlation based on the session. That's 101. We should already know that. Now, the application of Asia session. Identifying the anatomy of Asia session is very important, as there are routine intraday setups that are all derived from how Asia session forms. We don't just have one model, two models, three. We have several intraday models, all of which are strictly contingent on what Asia session does. If Asia session is ranging, there are going to be different models that we're going to be using. If Asia is trending, there are going to be different models that we are using. Again, always a why, always a rhyme, always a reason. Everyone knows the typical daily cycle that happens, BTMM, but what if we told you there's over 10 plus variations? Now, I have cut that down drastically. Even, I believe, the last boot camp, I didn't even go in the others, because honestly, I don't look at them. It's too sophisticated. Less is more, and I don't look at them, right? For those who know the whipsaw type A, type B, I don't give a shit about that. I just trade the easy crap, right? Keep it stupid simple, keep it easy, right? So you're going to have 6 variations, I believe, the best ones, all that I do every single day. All right, we are ready. So let's take a look. Asia session anatomy. Now, again, this will be basic review for hopefully everyone, but Asia session anatomy, when we're looking at Asia session, these are points to note. All of these points to note to the left, you want to make sure that you write these out. These are things you always need to ask yourself. Is Asia high or Asia low lying just before the correct order block? If so, Asia high / low will act as an inducement for us to sell or buy after it into the correct order block. If you have a correct order block over here, and guess Asia high looks like this. Helen Keller can see this crap, everybody. This is where it's just, oh, come up here, drop lower. If you have an order block that lies above or below Asia, these are liquidity points. Asia session is going to act as an inducement. And if you can remember on day one, when we talked about inducement strengths, you have your minor, medium, major inducements. Hopefully you guys took note that medium inducements are Asia high and Asia low, because that's where breakout traders are going to have their pending stop orders. Another important question to ask yourself: did Asia high or low mitigate the correct order block to the left? That is another thing that can very well happen. I've seen it happen hundreds of times. When you have your order block, if we had to switch this up a little bit, if you had your order block during right here and your order block was mitigated during Asia high, can everyone tell me in the chat if your main order block was mitigated during Asia high? Do you think you're still going to be looking above Asia high to sell if Asia high mitigated your order block? Yes or no? Definitely not, right? Because it already mitigated. There's a purpose. You don't just want to think about, oh, it's equal highs, it needs to go there. Hell no. If there's no purpose for it too, it simply will not, right? So if Asia mitigates your order block, majority of the time, it's just going to reverse afterwards. It's not going to come deeper. It can, but it doesn't have to. If it does, you now know why. If you do have order block mitigated, but for whatever reason, if you have a refinement above that remains unmitigated, it can always tap into your refinement. Now you know why. It can also establish order flow within Asia that we look to continue after Asia session. Another common thing. Another question: is there order flow established in Asia range after mitigating the higher time frame order block? In this instance, let's say that we had order flow that was mitigated. Oh, this was mitigated over here. This was mitigated over here. And let's say now this is where Frankfurt happens. It just goes down. What do you think is going to happen during London potentially? If this is where the main order flow is, what do you think is going to happen during London if this was Frankfurt? If we have order flow, Asia mitigates and follows order flow, what do you think is going to happen during London if this is where price currently is?
Reverse
Well,
or continue order flow. I don't know.
Continue order flow, right? It could just come up here and then continue order flow. So if there's order flow in Asia, always be mindful of that. If yes, tell us the price will continue order flow, right? All you have to do is read a little bit lower. So after that, next question: is there a meaningful POI at Asia midline, right? If this is where you are, maybe you have an order block is right at Asia midline. Is there a meaningful order block there? Again, if you've ever heard, use 50% of the order block, that's the biggest load of horse crap, someone can say. Concept or theoretically, I understand why. That's how I was first taught back 2019. Look at 50% of, a candle. Why? Because in theory, that's where that's where all the orders are, the 50% of a candle. From a theoretical standpoint, it makes sense. From Asia, the same thing applies. If this is all of your liquidity during Asia, where do you think the deviation is going to be of the orders? It's going to be in the 50%, right? So looking at a midline makes a lot of sense in this standpoint. Is it a rule? No, but you're going to see a lot of times it's one of my favorite setups, okay? Best for intraday plays. Then ask yourself, is there a POI that aligns with Asia high or low after the breakout? If you see Asia build like so, you see then London, New York, this doesn't matter. But then you see this, the only time you would ever be interested in a break and retest is if you have the most convincing order block that aligns after the low or the high is broken. So in this scenario, it would be a break and retest of Asia high, Asia low. That's the only time you will ever be using a break and retest, but there will be a very large reason, as you're going to see in these examples. So all of these points are all the models that you're going to be learning about. I hope that you all wrote down these questions, if not, again, if at least abbreviated. These are always important to ask yourself. You always need to ask yourself. This is things I'm always subconsciously aware of whenever going to the chart every single day for London session. Every single. I don't have, obviously, a checklist. It's up in the woo-ha, but it's very important to always be mindful of. All right. Other points to know. Is Asia session trending, hyperextended, or is it ranging? Huge point here. Huge. If Asia is ranging, or if it's if it's trending, why is it trending? Well, again, it could be trending. Maybe if you have an order block here. Here comes Frankfurt. It could be doing this. It could also be doing this. Here's your inducement. You could have an order block below. For that price to go higher. I mean, I'm not going to draw them right now. Get off track. But you can always ask yourself if Asia is trending or if it's ranging. Either of them is going to be a key piece to understand what the next move to follow is. If you are ranging or if you're trending, I will say this. If you are trending, 2 questions to ask yourself. Are we building up towards an inducement? Are we building up towards an inducement? Or if you're not and you're ranging, well, then just expect to keep selling until you do come to one. Again,
until what?
Say what?
Until what?
The end of the day. Ask yourself, when Asia is trending, if Asia is trending like this, why? Why is Asia trending? It's going to be trending for 2 reasons or 3. If everything is efficient over here and there's no reason for it to stop, it won't. So it'll be trending. Ask yourself, is it building up towards something, right? Do you have, an inducement point right here that's very obvious that Asia is trying to take out to then reverse, right? If it's not, and let's say that you have, again, something like this. If you're bearish and this is where you're targeting, right? And this is maybe where an SMC is, and you have a reaction from here, and this is an SMC, what do you expect to do? Sell above and then continue lower. So if Asia is trending, you're either going to be continuing the sell trend or you're going to be reversing. That's 2 things you need to come to conclusion. All right. So type of 1 if you're ready to continue, and then we can fly through all of these examples. All right. I just got a bunch right there. So let's go. Intraday mastery, daily cycle variations. Master the various daily cycle variations for the best intraday trades to become an intraday mastermind, right? Our first scenario, this is what we call POI above Asia high and below Asia low, right? So here, do not draw all these individual lines, all right? Rather, I would just draw a box. After you draw your box, I would just do this. Just make it easy. Box you have here, right? And then you look for your order block here. Make it fit the inducement patterns, right? Just do all of this. So POI above Asia high, below Asia low. As we know, Asia is a liquidity point, right? So what you should look for, and an uptrend, if you're in an uptrend, you should be looking for your order block below Asia low, right? In this instance, you could have your engineered liquidity all the way over here. And then what happens is after Asia session is ranging like this, that's of course when you would expect potentially Frankfurt to break out, take out the inducement and the engineered liquidity, and then London session will just reverse afterwards. So this is the model for POI above or below Asia low. You buy below Asia low, right? And of course, we have examples for that. And it's more important just to write, just draw the box, make an inducement pattern, and then show below Asia low, because again, it's all logical, right? It's all logic. It's never going to look picture perfect. I mean, it can look picture perfect, but the logic is more important than all these individual points. Zane, you said easy day. I'm not sure if that's mockery or if you're being serious. I'm hoping it's an easy day, but it's time crunch right now. All right. So now I'll do the Asia high as well, right? Asia high, what you can have, right, is you can have something that looks like this. Just do this. Here's your line to draw. Here is your box. Here's your inducement. And then sell above Asia high, right? If you're in a downtrend, again, it almost tells you exactly how these two pieces fit together. If you have your main order block to the left that's mitigated, this would be your inducement. This would be your trap. This would be order flow. Sell above Asia high. Isn't that what they call the P? What you mean, bro? Right here? I'm not sure what you're referring to, Zane. I'm not sure what you're referring to, they. Yeah, go for it. All right, type a 1 in the chat when you are done with these models and you understand conceptually. All right, let's continue. Oh shit. Points to note. This is the most manipulated setup. This is the prime example. BTMM. Again, Asia buildup, breakout, reverse. This is just a typical BTMM cycle. It occurs when there's an order block above Asia high, below Asia low, where we view them to be an inducement for us to mitigate. Breakout to the one side and then reversal. Again, you'll notice breakout, reverse, breakout, reverse. This is just a typical model. Take an example, right? Here, where are we trending? We are trending up, up. So if we are trending higher, that means we are going to be looking to buy below something, right? So over here, what do we see? Well, from a main range, we have a high, and this is all a higher time frame leg from a previous high downwards, right? Let's imagine for a minute. Internally, we have all these internal, right? All these internal pushes here, 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 here. This is our BOS, here, here. So my question is, where's your inducement for this order block? Good. This is our inducement. This is not inducing anybody. What type of trader is being induced? This isn't structure. This is just on a lower time frame and engineered liquidity point, not inducing anybody. So this is our inducement, right? So after our inducement comes down to where price came, then all there's left to understand is, all right, well, mitigation happened. Where's Asia session? Asia session is, again, building liquidity. It's trending. Why is Asia trending in this instance? Well, in this case, we see that we had an order block, clear as day. It was mitigated. So then following order flow, where's the last order block that has imbalance? It's right here, right? So what happens is Asia low here, and then it goes higher. Where's our engineered liquidity? Well, you both got it somewhere, right? Right, that's our engineered liquidity. So fractally, this is where structure, multi-time frame structure is so important, because we know that within this range, what do we have? We have this. Great. Then you have this, you have this, I have this. You have your inducement, you have your engineered liquidity. And if your order block is lying at engineered liquidity, is it going to work, everybody? If your order block is lying at engineered liquidity, is it going to work? I hope someone says yes. No. Good. No, it's not going to work. So what do we expect? In this case, buy below Asia low. So we buy below Asia low. This is when New York happens. This is the build up during Frankfurt, building up towards what? Our inducement, our engineered liquidity, mitigates our order block following order flow. After order flow is mitigated, let's think about it. Where are now we going to be targeting? Well, if we're targeting, we know here, yes, Mr. Villafuerte, this is a strong target following structure, but we don't want to hold everything till there. I mean, again, maximizing profit, maximizing money, not going to be the best way to go. So let's think about it. How can we maximize our return by managing the trade smart? Where is the first imbalance after? Let's say there's no imbalance here. Let's say there is none. Well, no imbalance, no imbalance, no imbalance, no imbalance, boom, wall. That tells us, great, now we know where to take out. This will be an area for a first TP. So we can go ahead and take out good profit here. This will be already be a 1 to 10, 1 to 15, who knows, this point. And then we have an SMT. SMTs do what? Pull back to then break, right? So that's where we have everything starting to come into play. So that should make sense to you guys. Again, if you have a wall, you know price is just going to rapidly expand. So this just comes in the form of quick mitigations, SMT, come back, and then fly higher. Again, this is just the 15-minute time frame. There's a lot on the 1 minute, right? So just be mindful of that. Yes, the higher time frame is bullish, correct. But it's still important to manage your positions, right? You know, while you can hold to here, always play devil's advocate. What I do, and I had one of the students over the another night, and I was showing him, I always have my bias to what I want to have happen. And this is where you have like the devil and the angel on your shoulder, right? You know, I always know what I want to have happen, but what I always do is I always give reason for it not to work. So rather than always think I'm 100% right, I always have doubt in my mind to keep me realistic. Could I hold it here? 100%. But you need to be able to manage your position, because hypothetically, what if you're wrong? Do you really just want to blow all this profit? No, that's not the smart way to trade, right? You need to manage what you make, because if you can't manage what you have, you're not going to make more than what you need, or more. You're not going to make more than what you deserve. If you can manage accordingly, then that's going to enable you subconsciously to be willing to accept greater profits, better trades. So it's always there's a psychological aspect to it. It's more than just, oh, going to here.
Can I say something real quick?
Is it what?
Can I say something real quick?
Pues sí.
I just have this doubt, because for me, if this setup were invalid, is if there is some kind of a real order block over here on the higher time frame, and I much rather take profits something around here, because for my understanding this could be a POS to realign with this, and then we have the some kind of liquidity graph over here and continuation, and then this will be
Sure.
the order block to just melt. But
Yeah.
in this case, the setup is obviously to the upside target.
Mhm.
If we are going to be wrong on this one, I think this will be a valid OB kind of.
And that's why trade management is so important. What you said makes complete sense. But this is where you always need to have 2 or 3 TPs. Make it mechanical. Remember how I said TP1, TP2, TP3? This will be a first TP. Why is this going to be a TP? Because this could be an inducement for this to come down, right? Your next TP is always going to be at engineered liquidity. Your next and final TP should always be the major or the next highest inducement. You're taking partials at these areas because hypothetically, if you are wrong, well, it's always needs to take out liquidity before reversing. It could take out this, then reverse. So just playing devil's advocate, just meaning always take some off, right? Never be 100%, because I've had trades where I haven't taken anything off. It ended up being amazing. I have trades where I was up a ton of money, did not take anything off because I want to trust myself. Always in the hindsight, you'll say, I wish I took some off. I wish I did. I wish I did. To mitigate that, instead of losing, it's always best to just say, you know what? I made money. And that's where you need to have, again, the DEX, the WEX, things that you guys will learn later on, because you need to have the understanding that the mastery of the concepts is the first school. But once you start making the money and you can put money into perspective, for instance, here, like you said, here, what if you made what you need for your phone bill for the month? Are you really going to risk, going all the way up here? No, because you just need to make what you need before you go above and beyond. Always take some bread off the table. And again, things spend the next several months with you guys working on. Here, another example. Where's another example of buy below Asia low? Again, combining everything. If you have your main structure here, you have your new higher low, new higher high. We know based on our setups that what do we need? We need to always identify internal structure, always. And I don't care how good you guys think you are identifying just lines, always mark circles. It's just the smallest difference can change your whole analysis, right? There could be something you didn't see otherwise. So anyways, internal, boom, boom, boom. Now guess what? Here comes Frankfurt. Oh shit. Frankfurt's building up, right? Frankfurt's building up. What are we thinking at this point in time? What can London do if Frankfurt is building up? 2 things. London can either reverse Frankfurt or continue. Let's say at this point in time, this is where London opens. London opens right here. What do we think is going to happen if Frankfurt hadn't made the main mitigation? London's probably going to make the main mitigation, as you can see here. Boom, all these sells. And then as soon as London hits, taps our order block, buy below Asia low, what's going to happen? Reverse. In this instance, because you have all of this and you have here, I wouldn't take partials because you can be confident the trend is going to continue. It's always tying together. So this is buying below Asia low. You have your type 3 inducement. You're building up towards your inducement. After your inducement, you have your trap. And then that's where after, of course, if you don't have anything, that's where your order flow will align and it becomes very cyclical. Good. All right. Next variation, POI at Asia high, at Asia low. So go ahead, take these notes down. And once you are done with these notes, I will go over everything. So the difference between this one and the previous is we were buying below Asia low and selling above Asia high. In this scenario, we're selling at Asia high and at Asia low, right? So we're not viewing them as liquidity points. Why would that happen? Well, if they are following order flow, this is what we can expect to happen, right? So if Asia low mitigates something to the left, and we're in a bullish trend, and you see Asia low mitigate order flow, mitigate order flow. These are some of my absolute favorite setups when you see this, right? Because it's still going to be the whole process. It's just the same thing, just with an extra confluence to it, right? You have your structure high, low, high, comes back. Oh, if this is an extreme order block, I know that I need to have a type 3 inducement. So where's my type 3 going to be? Well, no shocker here. Here, 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 here. This will be your type 3. Again, just equal lows, put that there. But type 3 inducement into where? Your extreme order block at London Open. If this is your build up during Frankfurt, you have your mitigation during London, and then price will continue. So it's very straightforward, but these little minute details can really transform your approach every single day. And they will. And you follow this scenario when Asia high or Asia low mitigates again that main order block.
What is the arroba above boy above Asian high?
EPA? Is that what you're referring to? Oh, yes, at, like it's lying at Asia high. Your order block is AT, like it's lying at Asia high. This is just like a little thing to illustrate at lying at. I do. It's easier. Less is more. All right. So are we all good on this? It's pretty straightforward. I wouldn't. It's as if it's order flow. Asia high mitigates order flow. You then follow the order flow. That's essentially it. I pressed shift and number 2, my friend. Still 2 clicks. Shift 2. All right, let's get right to it. Example, right? Example. How can we identify POI Asia low? Again, if this is where order flow started, this was mitigated. We see a point of interest before Asia. It was mitigated. And then what do we see after? Order flow, order flow, order flow. Guess what? And again, this right here, right? You guys see this? This was just another order block in a different time frame. It's not this one. It's not this one. You guys just can't see it on this time frame. So then this is where London opens, right? London opens here. This is right. Frankfurt makes, right? Just continues the mitigation. London again continues Frankfurt, mitigates order flow, and then boom, goes up. Why all of a sudden does price randomly go up here? Well, imbalance is mitigated, wall. Now price has a reason just to go all the way up. So if you have a wall and you're bullish, now you just, order flow, right? Order flow. Oh my God, why did price not respect this low? This is an inducement point. So again, you'll have intuition to know it needs to come down here to a lower refinement. to then go higher. So this is how you would apply it, POI following order flow afterwards. Another example, which these are my favorite, and from a someone who's not highly experienced in this aspect, they might say, oh, here is, oh my God, there's all these equal highs. What does it need to take out those equal highs? Right? If this is where price currently is, and you're like, well, shoot, price needs to sell above these equal highs. What does price need to sell above equal highs? What are two things price needs to go anywhere? Get used to it. I'm gonna keep saying this over and over and over again. Why did price not go above here? Why did the order flow, why was it respected? Anyone? Because we have a reason, huh? Yeah, we need OB and gas, two things to get there. For price to break this high, we need the gas. Well, do we collect an inducement? Great. Do we mitigate an order block? Nope. Guess what? It ain't going there. So if it collected gas and it didn't mitigate a true order block, what is this? Whatever it decided to mitigate, it's an SMT. So looking at your whole approach model, if this is an SMT, two things. It'll be a type 2, type 1, well, type 3. Following all this, it's either going to break it to come higher, or because order flow is intact, it's going to respect it. So knowing that this is an SMT, where's your type 2? Well, within here, high, higher, low, higher, high. Wow, crazy, right? Boom. There you go. Right? So this is what you would expect. And these are very easy. And again, why do we think this happened? Why are we taking out this low? What do you think the left looks like? I know someone's advanced enough to draw out exactly what this looks like or why this happened. What happened over here for price to take out this? Most likely someone drew this line over here. Great, which tells you over here, you had an order block, which tells you here, your inducement, your trap, wherever an SMT might be. Again, this is one time frame, so somewhere an SMT is over here. If your SMT is being mitigated, order flow to then break it. Do you guys see what I'm getting at now? Like this right here is literally just and then again, it decided to go higher, but that's all this is. Are you guys able to see this over here? Does this somewhat make sense to you guys?
It is fair to say that a true order block, when it completed the cycle, then becomes an SMT order block.
Say that again.
For example, here we have, I'm gonna take this. We have this SMT order block. Let's say that is an order block.
Yep.
It completed the cycle here.
Yep.
So when it completed, it is fair to say that this true order block becomes a SMT order block.
What true order block? This over here?
Yeah.
So no, this is still an SMT. Remember, SMTs, if your main, one second, everybody. After this, I'll continue. If this is an SMT, right? SMTs can either cause pullbacks to come higher, or SMTs can cause price to go lower and then it can go higher. As long, like it won't break a a new range. So, well, that's a question. Write that down. I'll answer that in more depth when we're on the respective section. But go ahead and add to your notes, like or questions to ask. How far will an SMT go? Because SMTs, like in this example, this is a type 1 inducement. Probably still mitigate an SMT, so it went lower. But I know what you're asking. Reference it, and I will answer in the notes. That's a good question. Or Q&A rather. All right. So we should all be somewhat familiar with this. Let's go through. One of the last ones is going to be a POI at Asia midline, right? So this one is around the 50% of Asia. You're typically going to see an order block. This doesn't mean it could be lying right at the 50%. It could be lying just below the midline. It could be lying above the midline, but the order block itself will be very obvious. These are the easiest intraday plays. They're very easy. This happens when your higher time frame point of interest is unmitigated. If you have a large order block within here and it's unmitigated, price will typically come back in to mitigate your order block that's lying at Asia session or Asia midline, right? Another high confluence of midline plays, but that is not necessary, is when it follows order flow. For here, again, if POI, if Asia high follows order flow, and then your last point of interest is Asia midline and it follows order flow, that's a home run. That's very obvious, right? Because order flow is a key indication of intent from its institutional intent, right? So that is very straightforward to be following. Again, do not expect to master these in a day today. It will take some time, but nothing worth having comes easy or happens overnight. We all know that by now. This will also happen when there's order flow in the middle of nowhere to the left. What do I mean by this? Another key point. If you have this, and let's say over here, this is where, let's say this is where Asia session currently is. Right, this is where Asia session currently is. Over to the left, if your order block is over here, and this is just a whole bunch of imbalance, we're seeking an order block to fill an imbalance. So in order for us to go higher, we just need to do a quick mitigation of Asia midline to go there, right? So when you see nothing to the left being mitigated, just expect to follow the internal trend to then target just above Asia high and just to keep going until it gets to your liquidity point. That's just what this point is referencing. Again, levels and levels and levels to this. I'm trying to keep it surface level right now for the remainder. Yeah, guys, so order flow at Asia midline, you guys will see. Obvious. Does it need to follow order flow? No, but POIs at Asia midline are a really good indication. When it comes to order blocks, if you do not remember anything else, just remember the largest order block is the only one that needs to be mitigated. You will have not learned that anywhere else because that's something I came across on my own. You're never going to always make the right refinements, but as long as you understand the biggest one, that will greatly reduce your over refinements, your missed order blocks, everything, as we talked about yesterday and how I approach them. All right, type A1 if you are ready to continue. Great. Example here. Order block, right? Very small, but it lies within our midline. It's just a little below in this case, right? But still, it's a valid order block right here. So how could have we caught this trade, for instance? Again, AUDCAD.A1trade.CAD. If you do, great. So here, where is our main structure? Well, And if you're struggling with structure, squint your eyes. Where are the main pushes and retracements? Am I going to mark all this stuff? No, not going to help me, right? So I'm just going to identify here, 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 which tells me, fractally speaking, on a higher time frame, my wave is going to be here. So this could be a type 1 inducement. We look to buy below, right, lows. And where's the order block where price is going to stop? Is it here? Again, how many imbalances do we have? We have our first imbalance. We have our second one. So we want to focus on our second one. Lines up with POI Asia midline. We have a trend line. We have break and retest all the way over here. Tells you why this isn't valid. So many different types of liquidity to tell you that this is obvious, right? This is the best option to choose. Again, when does this happen? London close. Again, combining timing always is a very high confluence for identifying the high quality trades. So does it always have to happen right afterwards? No, it can happen at the end of the day. It could happen anyways. Does that mean you're going to take it? No, if it's not during your session timing, do not take it until you have all of the experience. And then you want to decide to break your rules, but for a specific reason. There's a time and place for that. But don't just start breaking your rules out of the gate, or you will be setting yourself up for failure. All right. Another one again. Can't see the order block. This is not on the relevant time frame, but how would you approach this? Viewing the information that we have, starting from the left. Where's the engineered liquidity to the left? Everyone identify it. Over here, where's the engineered liquidity? And if you don't know, just say, I don't know. That's okay. Right? So this is the engineered liquidity to the left, right here. Why? Because price sweeps. Does it sweep something? Yes. Does it mitigate anything? No. Does it have order flow start afterwards? Yes. This is where our engineered liquidity is. So knowing that we need to break this at this point in time, what is price doing up until here? Don't look, please never look at an order block like this. Again, everyone, why won't this order block work? Why will this order block not work?
Because it's lying in liquidity.
Specifically, what is it lying at? What type of liquidity?
Wall.
Wall. Engineered liquidity, wall, right? So it's not going to work. So this will be some form of SMT you could potentially expect a pullback from, right? And we did. Cool. And that's all that, it came to, right? So what happens is after we had, this is during Frankfurt now, during Frankfurt session, we had price come back and do what? Do we mitigate anything? No, we're in an imbalance. So does price have a reason to go lower? Did it collect liquidity for this move to happen? Well, yes, we took out a high. Did it mitigate anything? No. So is it going to go lower? No. This is our SMT, or a random place it mitigated. We then are just going to follow the current structure. So now that we know we're following the current structure from this trading range, we mitigated an SMT. And now we're also following order flow, right? We now want to identify where our order block is. You're going to have an extreme down here, of course, but this is a 5 minute something lower for a midline. We have an inducement beforehand. Beautiful. Again, please don't take this. There's never an inducement before here, so don't take it. If there's no inducement, you're going to lose. You are the inducement, right? So price takes it out, comes to our midline, and then, yay, it goes higher, right? So then what happens afterwards? This is mitigated. Where's your next order block following order flow? This becomes your next order block, right? That becomes your next order block. You have an inducement. Price then goes higher. And why is it going higher? Because We have yet to take this out. Once we take it out, you guys will begin to know what type of decisional this is. Come back, react. Where does price come to? Well, takes out the engineered liquidity, right? And then it reverses. So you guys are going to become very good with understanding how to switch to a liquidity perspective, but you have to master structure first. Because how I see things, I see this, and then I view higher, right? But it's only because I've done this tens of thousands of times I'm able to see that way. And that's what you guys will be able to do over the next several weeks and months to come. Good. And the last one, like we talked about, is the break and retest. The retest of Asia high, the retest of Asia low. And after this, we're going to have our break and get right into the last block of today. Now, during here, everybody, this happens after Asia high is broken. So if you're in a trend like so, right, typically you're going to be following some form of order flow. And this is the only time, first, Asia high must be broken. And second of all, then you'll identify your order block following order flow that happens to align with Asia high that you will take. But why does it work? Again, to the left, it's emitting some form of SMT, right? Whenever you see a pullback happen, an order block's being mitigated anywhere, even when you might not see. That's what stops price. You have your order block being mitigated. Comes back to respect the true structure, and then it goes higher. So this is your break and retest of Asia high, but everything else ties together for that to happen. Asia low is the exact same thing. You're going to have your structure, break of Asia low. If your order block lines up with Asia low, and if it follows some form of order flow, it's even a better confirmation. Is it necessary? No, but I would heavily advise you not to take a trade like this if there is no order flow. These are not our favorite setups, but they are present still multiple times a week. And these are just continuation trades. Once everyone is done with this, please type A1 in the chat, and then we'll look at the example, go to the break, and then finish off the last section of today. Six yeses, let's see, keep going. Awesome, all right. Example of this. Let's think about it, right? Where is Asia high broken? Broken over here. Oh, here's our order block lies with Asia high. Do we blindly take this? No. But there's a reason why it worked. Again, first thing you always do, your main structure, then your internal, right? You'll get very good at marking both of them when you are always, the more you do it, simply put. High, low, high, low, high. Main structure. Where's your internal structure to this trend? Boom, boom, boom. This is where it broke. Tells me this is where structure is reversing. Then you have, this, you have this. Now what are you gonna look for? Again, you can look for this. Well, shit, here's the inducement. Do I look to buy below? You might have to even step it up even a further notch. Where's your structure within this wave? Here, 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 here. Comes your inducement. Price comes in here. Goes higher. Again, even type 2, you can do type 2 inducements. I guess what I'm saying, everybody, is you have your liquidity here. You have your order block with your engineered liquidity above. You have all these confluences. And again, what's going to tell you this is going to work is contingent on what's to the left. If you're lying at a whole bunch of liquidity over here at an SMT and you see liquidity building, if you see you have an order block right here, and most importantly, you see that you have order flow established, I mean, look at that. I mean, check it out, right? The only two order blocks you have in this case are right here, which really lies at a trend line, right? Or you have this one. You only have two options. And which one tells you is going to be the valid order block is going to be the one that has the liquidity right before it. Always remember that. If you don't know which order block, choose the first one that has the liquidity building substantially before it. All right, finally. So now we have the application. All right, now everyone, I'm going to have, you guys can set it 5 or 10 minutes. I'll leave it up to you guys. I can go all day. So you guys let me know. And after that break, we'll come back, go to training. We'll come back. Let me see. We'll come back, talk about the roadmap, go to Q&A, and then from there, training. All right, so you guys are just being a-holes at this point. All right, let's do a right, let's get 2 more people to say. How long? 5, 7, 10, 5, 7, 10. The next 5 people who say, we're going to choose. Pick your poison, y'all. 5, 5, 8. Okay, let's do 7. 7 minutes. Ziggy, set a timer for 7 minutes. You guys have 7 minutes. Please be back here in 7 minutes, and we're going to be right back to finish off the last block of today. See you guys soon. One and a half minutes. All right, it looks like majority of people are not back yet. So again, please, this is going to be a 1.5 minute reminder to come back to your seats and you'll be resuming. Momentarily. Going to actually. All right, everyone, we are going to go ahead and continue resume where we left off. All right, so let's get right to it. So now I'm going to actually leave it up to you guys because we are a little, again, mentioned 3 o'clock, it's 3:08 right now. Let me go ahead and share my screen. Sure. All right, everyone, so this is going to be our last section. So what I'm actually going to do now is I'm going to go into the cordials, the completion of the bootcamp. Just for those who are current students, so they don't have to wait another hour for the new information, or not an hour, but for the next level of information, I'm going to give them the most important information so they can leave, they can go, and then we're going to go to the Q&A. We're going to show you guys some weekly cycle stuff. Again, nothing that is going to be entirely, that's all going to be entry master. I'm going to talk about that, when your journey to becoming a mastermind, as it's going to be new information for everyone. So it's very important. So I guess that's where we are going to go ahead and go now. All right, so let's go ahead and take a look at this. Let me go ahead and skip this. So we're going to go through the weekly cycle here. After I go through some of the cordials. So assuming that everything up to this point has been completed, again, for those who stayed, for current students, thank you guys. I really hope you guys had some key takeaways from this boot camp, as there was quite some things that have been improvised, innovated, and especially your journey now afterwards. So the finale, right? Your next steps to success. So now I'm going to be showcasing and showing you guys what your upcoming journey is actually going to look like. At this point, surface level, you have learned all of the concepts that are needed to actually start making money, to become consistent and highly profitable. But this is just the beginning. There are so many things that you are going to be learning along the way. Everyone wants to focus on the analysis, but the real growth, the real gems lie in everything non-analytical. That's psychology, the management, the risk management, the specific route to how to get funded, what the purpose of trading is, how to replace your full-time income, or how to become a full-time trader. Those are things that you can't talk about in a boot camp, and that's where the real value lies. Your journey to success. These concepts alone will not make you profitable. Hate to break it to you. Why won't it? It depends on the person. Are you willing to do whatever it takes to get what you want, what you deserve? If you're willing to do what it takes and you have what you need up here, it doesn't matter anything else that you use. It's inevitable. It is your destiny. You're going to find one way or another to do it. But by having this in combination with that killer mindset, with the mindset of a successful individual, and learning how to continuously grow your mindset, that's what's going to enable you to spread your wings and fly, right? A strategy by itself will not make you successful. Case in point, SMC. How many SMC traders actually do well, actually show withdrawals, actually show the money they're making? No one. By that, I mean maybe 1% or less, because no one makes money because they're so focused on the analysis. Your mindset and how you manage your money is what's going to separate you from everybody else. There's a reason why majority of people fail, right? Trading attracts those who want to get rich quick, but only rewards those who are in it for the long run. At this point, everyone who's a part of here has been a part of trading, or has at least heard of trading more than 2 years. And if you're less than 2 years, I cannot say how jealous I am of you, because you have the world right in front of you, but it's up to you to grab it and determine that you want to make it yours, right? So with that being said, this is the Mastermind Bootcamp, but you guys are not masterminds now. Just like when you go to college, when you first go into college, are you graduates? Hell no. You are not graduates. You have to now put in the work. You have to know what it seemed, what it takes to really learn, what it takes to become a mastermind. Becoming a mastermind is not about just analysis, right? Mastermind is mastering your mindset to control every aspect of your life, relationships, finances, your emotion, your overall psychological makeup. If you can control the only thing that limits you in your life is your mind. If you can remove that and you know how to control and conquer your fears, your mindset, learn what it takes, that's what a mastermind is, right? So to access this mastermind level, you will need to be a stellar student in addition to a phenomenal trader. A mastermind title is not just something that's going to be given lightly. It's not just going to be, congrats, you to the boot camp, you're a mastermind. Because if that were the case and we had all these masterminds yet no one was making money, there's no point to even being a mastermind because you're just like everyone else. So there's definitely a level of status associated with becoming a mastermind. People are going to look at you and say, wow, this dude actually or woman actually changed their effing life and they had what it took to beat the odds. Something I say to myself, the odds can't be against you when you are the fucking odds, and that's just what keeps me going. This world happens for me, not to me. And I'm going to do everything I can to get everything I deserve. And I'm willing to do what most people won't to live the lives most people don't. And you have to have that same mindset to be at the top of the food chain. It is not for everyone. And that's why majority of people aren't there. They're still trapped in the matrix. But my hope and my goal is to show you guys what it takes, give everything that you need, but leave it up to you to go through the levels of success so you can actually get there. Again, if it were easy, everyone would do it. A majority of people will never do it because it's too hard. I know that there's people in here, all of us at some point. Have you ever lived paycheck to paycheck? Have you ever, had to skip meals, skip this, or even be homeless and, not even be able to provide for yourself, for your kids, for your family? That shit is hard. Being rich, but having money is also hard, but to each their own. You got to pick your poison. What do you want more? Do you want success, happiness, and willing to do whatever it takes to get there and sacrifice? Or are you willing just to give in and cave in and just accept it what it is? That's a loser mentality. And all of you guys here, you all are here for the same reason, to achieve success. Do what it takes by any means necessary. And something I heard a long time ago, if you do not sacrifice for what you want becomes the sacrifice. If you're not willing to do what it takes to get what you want, you're never going to get what you want. And you're just going to, be a victim. You guys are victors. You guys are going to take over your life. And this is where it starts. The boot camp now is going to be behind you guys. The future is what lies ahead. And my goal is to make sure you take every single step as it comes. If you take too big of a step, if you leap, you're going to fall, right? You need to take every single step, trust the process, and don't let your ego dictate your results. If you can constantly fight the urge to be impulsive, fight the urge to do things you really, really, really want to do, maybe faster than you should, then that's going to allow the universe energy to come back to you in a reciprocal form when you're ready to move on, when you're ready and you have what it takes. Because if you receive more than what you can handle, you're never going to succeed. So that is my goal, guys. So I'm excited for this. It's going to be a journey. It's a brand new rebranded approach for current students, for new students. And this is where we are going to take off together as a community. And you guys are the pioneers in this movement. There's a much larger picture that goes beyond this, that you guys will be filled on months later down the road. But I'm truly and sincerely excited for your guys' new journey and, willingness to be a part and, change all of your guys' lives. All right. With that being said, let's take a look at what it's going to take, right? So you can expect to earn your spot and learn what it takes to become D1%. So with that being said, I'm going to skip this and I'm going to show you guys a little bit. Man, it's not formatted. All right. I'm going to show this to you guys right here. Okay. So you have this. So this is where you guys currently are now. You guys are right here. You have just completed the boot camp. Congratulations, right? After the boot camp, for new students, New students, current students, the community is being innovated. New students are going to work together. You guys are going to be considered pro tier. You guys are going to be considered pro students. Push and P, you guys are pro students. Pro students, what does that mean? You guys are going to be collaboratively working together, mastering all of the core concepts, putting into practice, back testing, scoring on your exams to really show that you know the material. And in coordination with that, you guys are going to have specific levels assigned on Discord. You're going to have specific engagement roles. You guys are going to have teams where you guys are going to be working together for accountability. And these are going to be your teams that you're going to be working with, switching every month. So not only do you get to meet people, you get to also learn from others. Because by having a limiting belief that you know everything, that doesn't allow you to learn anything else. Am I the smartest one in the room? Absolutely not. If I walk into a room and I'm the smartest one, I'm in the wrong effing room. I know I can learn from you guys. You guys can learn from me. So with that being said, you're going to be learning from others. You're going to have to put in the work. Think about this as a prestigious university, prestigious college. If you want to get your graduation, get your diploma, AKA that transferring over to success, you have to go through the levels. So this is going to be pro tier. You're working with one another, mastering the basic concepts. Once you are able to graduate this, here you're going to be going into the elite tier. Now, I imagine that this is where a majority of people are going to fall into play. The elite tier, this is where you then are going to be mastering intraday mastery, and you're going to be mastering trade and risk management. In this tier, and again, you guys will have all this typed out for you in the next 24 hours, refining a few things here. In the elite tier, that's where you are still going to be working. You have to master all the concepts, but this is the first tier that you must start making these results. Not money-based, but either you work to get funded, you are growing consistently, you had your first 8% month, 10% month, 100% month, whatever it might be. But we need to ensure you're actually growing as a trader to ensure that you're making these results. Because if you're not making results, we have to go back to the basics, right? So this is where a majority of people are going to fall. After your elite tier, this is where you'll go into the dreamer tier. The dreamer tier are going to be the ones who are mastering algo mastery, psychology mastery, and have mastered everything up to this point. Dreamers, this is where I do exclusive one-on-ones. I coach you while you're trading. I watch you. You don't watch me. I watch you. And I'm like, what are you doing? What's your plan? How can we do this? At this point, you've made significant withdrawals from funding firms. You have your own personal money. You're doing extremely, extremely well. And you have your inner circle of the whole community. This might be 10%. It could be 15%. Who knows, right? This is why we're testing it out. But this is how we're going to be going forward. After the dreamer, you graduate, you have your first huge payout, several payouts, whatever it might be. That's where you now are going to be a mastermind. These are going to be our portfolio managers. These are going to be those who are managing hundreds of thousands of even millions of dollars, right? We do have a few people in here who are doing that, right? With that being said, we want to get everyone up to this point. Just because someone else can doesn't mean you can't, and vice versa. We want everyone to be at this point. That's where job opportunities for Dreams Effects, that's where employment, receiving external investor money. A lot of shit's going to be happening over the next 6 months. So by having this whole sophisticated plan and layout, it's going to ensure no stone is left unturned and make you extremely successful as long as you show up and do what it takes. And that's as simple as it is. But it's really going to come down to who really wants it and who kind of wants it. And those people are going to be made evident. We're not going to do anything, but we want to focus on those who want it more than they want to breathe. And we already know the handful of people from the current community who want it more than anything. And I guarantee you one of them is still on right now. There's always on. They want more than anything. And that's what just fuels me up. And that's all that I want to see. So with that being said, everybody, this is a brief overview. We have specifics, and I'll be sharing those with you guys later. But everything is going to be changing for current and new students. More announcements within the next 24 hours regarding that. All right. Than anything. And I guarantee you one of them is still on right now. well, there's mobile, always on. They want more than anything. And that's what just fuels me up. And that's all that I want to see. So with that being said, everybody, this is a brief overview. We have specifics, and I'll be sharing those with you guys later. But everything is going to be changing for current and new students. More announcements within the next 24 hours regarding that. All right. Okay, so now getting right into it, everyone. So the last thing that I'm going to be saying, and I'll make an announcement about this as well, right here. Clear this. All right, new updates about this. Well, with that being said, everyone, until we can go ahead and reflect back, welcome everybody officially to the community. I'm very excited to have all of you guys and looking forward to the next steps and showing you what it takes to make everything that you deserve. As I have done it myself, I went from making millions to losing absolutely everything, being homeless, the next year of my life, rebuilding. I've been all over and I know what it takes and I'm still on my way there. But hopefully inspiring other people to show you are your own limitation. If you have what it takes, you have everything that you need. Everything is just going to fall in place for you. So with that being said, as I've mentioned this entire time, all new diagrams for the bootcamp, as you saw in the bootcamp, even other things. If you would like to leave us a Trustpilot review of your experiences about the bootcamp, how it was, and please don't just make it a few words. You know, new students really do take to heart what you read, and it really does mean a lot to me myself because the 100 hours plus I put in for all these boot camps, I really want to see what it's like. And from the outsider perspective, you know, how you guys are transcribing. At every boot camp, I try to improve the most that I can and take everything you guys say to heart because, you know, it's like you guys are my family. You guys, we're all a family at the end of the day. And I want to do everything that I can to give you guys the best experience possible because you guys deserve it. It's not about money. It's about people having a community, working together, and make sure that the right people are a part of it. The right people for us and for them, you're making the best decision and we're giving you everything you need. So everything that you guys say, I take to heart and I love to see if you love it, if there's any things that you think that could be improved. As mentioned, one of the biggest things from the last bootcamp, not enough time. Well, there never is enough time because it took me years to get to this point, and 4 days is just the introduction. That's why ever since the last bootcamp, we started a whole course protocol. So everything is going to be there, right? With that being said, I don't want to elaborate on that too long, but thank you guys for putting your trust in me, putting your trust in Dreams Effects. And I can promise you, if you have what it takes, success is going to be the least of your worries. So sincerely, guys, thank you. And I'm looking forward to the rest of your journey to come and watching you guys change everything about your lives, starting to know you on a personal level. So thank you, everybody. And with that being said, I will leave the Trustpilot review in the chat box. I'll also post it in Discord right now. And immediately afterwards, we will get to the Q&A. Absolutely. Thank you, guys. Thank you. Pause this. I will be right back to here and give me just a moment, y'all. And again, if you do decide to leave a review, if you can just please DM me or Antoine, just send a proof of your review, send a screenshot of it. We then within over the next few days get all of the diagrams out to everyone. We have to put a watermark on for everyone, so it takes some time. So everyone by I would say Friday at the absolute latest, as long as you get reviews in the next few days, all diagrams should be completed. Hopefully within the next few days, all of you guys will be receiving it, maybe 40 hours. I don't know at this point. I'm just trying to get through this boot camp, but here is the link for the reviews, guys. I sincerely appreciate it. Again, completely up to you guys. And here is that. I'm going to post this in Discord as well. Over here. One second, y'all. I'm all right, I just sent it to y'all. Awesome. Yes, you can. This was beyond my expectations, honestly. I'm glad, brother. Thank you. Excited to be a coach once you're improved. Thank you for everything. I'm very happy. It makes me very happy when I see all feedback like this because the time I put in is a lot, and I'm here for all of you guys at the end of the day. So thank you, guys. I just went ahead and sent the review, and now in the meantime, let's go ahead and get back to here. Thanks, Tristan. I'm glad you're able to hop on, brother. All right, so let's go back to here. And at this point, again, more announcements will be released 24 hours to you guys, just so we can keep going along. Let's go down to here. All right, so again, more announcements next 24 hours, but in the meantime, everybody, let's go ahead and start with the Q&A section. I'm going to open up the Q&A now for however long. Let's see. It's difficult to hear you, brother.
Can you hear me now?
Yes.
I was asking, are we still going to talk about will you teach weekly cycle?
Oh, that was a little tough to hear. Hold on.
Let me type weekly cycle. I was asking about weekly cycle.
Oh, weekly cycle. Yes. Trevor, you're welcome, Trevor. Honestly, no one will push me like that and keep it until the end. Thank you. Absolutely, Jim. I'm very happy to be a part. Awesome. So yes, we can go over weekly cycles. First of all, I want to see if there's any current students who have any questions, just so I can let you guys go, because I'm going to be spending however long the remaining of whoever knows with answering all these questions. So I'm here for you guys. So yes, I have no problem doing that. It's right the slide next to me, but I want to see if there's any other questions just from current students. So if they need to go, then they're able to. If not, then yeah, we can go right to that. So any current students have any questions that they want to ask?
I do.
Yes.
I don't know. Like I told you before, I have been trying to be on the charts last week, and I was on the charts the whole week. But one thing that it's bothered me a little bit, it's that GU established some kind of like order flow. But the order flow came and mitigated a 30-minute OB, but it left unmitigated a 15-minute OB. So what are the chances for the price to come back to one of those like little unmitigated OBs, 15-minute OBs from the order flow? Because it's already established, it's already order flow being established, but there's like a little 15-minute OB that I think it's gonna tap and then go down. But can I just what are the possibilities for it to just like go all the way up?
Yeah, let's definitely take a look here. Let's see. So this, yes. Where are we currently? Okay, so let me just put some of this on and off. All right. So here, so you have asked, right? You're asking specifically, are you referring to this over here? This, if you want to annotate, I don't know if you have a screenshot when you share, if I can just go through it. I'm more than happy to go through this. So let's see what you're looking at. I heard 15-minute, 30-minute. What are the chances? What are you specifically referring to? The buys, the sells?
Okay, well, what I'm looking at, like the whole thing is that price must like the higher picture to me, it's that above here, there's like engineer liquidity, and there's like a bigger, this right. Okay, let me tell you. You have told us that this right here is like a major point for price to come. So how is price gonna get there? I was building some kind of like story, in my mind, but like as of right now, like I said, this is like order flow because I have been following the whole week. But like there's like a 15-minute OB right here, and there's like a 15-minute OB right here, like with imbalance. Okay. So right now my point, okay, well, another thing is that what I'm viewing at is that all this has been mitigated already. So price, I don't think price has to come like, I mean, if it does, it needs to come like to mitigate something down here, right? So what I'm thinking, it's either gonna take all this liquidity to come higher, to then come lower and grab this and then come higher, or is it gonna, oh, let me just erase that real quick. Or is it gonna stop? Is there any chance for order blocks? Since I mitigated a 30-minute order block, but that 30-minute order block has a 15-minute order block with imbalance, is there a chance for it to come here? Like, I guess it's like the stream, and then come a little lower to come higher?
Good.
Or is it just since they're just like 15 minutes OB, they're smaller, it's like a bigger chance for it just to run off?
Absolutely. So let's go through this real quick, right? So first things first, let's look at this, right? So we don't have to look GU to the left, right? It took out all-time lows, correct?
Mm-hmm.
I believe. So let's just say it took out all-time lows, meaning there's no order block to the left for us to react from. So right now we are currently in uncharted territories. And as for the past few months that, I've been saying, when we go to the weekly and we zoom out, right, we've already cleared all-time lows. And this is a major, major, major inducement. So the reason that we had a very large reaction from this area is because we took out a ton of liquidity. There was no order block that's been mitigated though. Personally, why I have not been looking at GU is because we've already cleared all of these lows. So now it can most definitely continue lower. So going from here, if we go to a 1 month perspective, and all new students, don't worry, I'm going to be on here for a long time. I'm here for you guys. Here, when we see we have a low, lower high, lower low. So this is our range, right? Now, starting from left to right, we know that all of this, we had the type 2 mitigated, a 12-month all the way over here, and then price sold down. So like we've been looking at, and again, I'm just building a whole narrative for what price is doing. Internally within this, we have even more structure. We have high, higher low, higher high, broke here. This is our first BOS telling us now this is our new range. So now we have a lower high. Now we have, right, you can't really say where a lower low is, but at this point, let's say we have a lower low, lower high, lower low, lower high, lower low. I'm just building the whole narrative so we can understand what price is most likely to do. So on a monthly perspective, we are still bearish. We are looking at our relevant structure range from here to here. Now, because we cleared new lows, we need to understand that the current range that's intact is this one right here. We also know that order flow, right? This was mitigated. This order block over here was mitigated, and then it dropped. So following order flow, naturally someone would think, oh, there needs to be another order block here. Based on this, because we already took out the main range, this ideally needs to be collected. But because we don't have an order block, I'm not going to expect prices to come all the way higher. I'm more likely to look for sells. So with that being said, then, if we're looking at here, where do you think a potential decisional might be if we're not going to be looking at an extreme up here? Thanks, Craig. Have a great one, bro. Absolutely right. We're going to have some form of decisional within here. Right now, whether it's this candle, whether it's somewhere in here, we're not going to get too deep right now, but we know that somewhere within here, we're going to have a decisional. I'm glad you're able to identify that. So now what we need to do is, because we already took out a main inducement, a very major one, now we want to start identifying on a lower time frame more inducements, more gas points. Since we finally collected this long destination, where are the next gas stations going to be? So from this perspective, where is our engineered liquidity within this range, right? Well, we can see it would be right here. Price randomly picked up, started doing pullbacks, XYZ. So this is going to be our engineered liquidity within the range, right? That's going to be our engineered liquidity. Now, we need to understand, because price did not mitigate an order block, we have a couple options. Price can either have some form of mitigation to go lower, it can continue here, or it can completely go higher, uncharted territory, still a few thousand pips away, not really relevant. So let's go down and figure out where is going to be a logical area for price to come back to. So let's go down to the 1 week. Nope, 1 week. So Cecilia, based on this structure. Now, what do we want to do if this is going to be our main leg? What do you think we are going to want to do after we identify the main leg?
Well, what I have been thinking, like I was thinking that this was like some kind of like the BOS kind of thing.
Mm-hmm.
So I was identifying this as like kind of like as a decisional. I was identifying this as a engineered liquidity. And this, because it was the one that kind of like created this whole move.
Exactly.
I was identifying this block, right? But like you said, it already tapped this decisional and it was kind of like forming some kind of like order flow.
Mm-hmm.
So that's why I'm like hesitating on either is it either gonna come back somewhere here, because there's like I found like I think it's like a 4-hour order block somewhere here.
Yep.
Because this right here, it tapped I think it was like the 2-day order block.
Mm-hmm.
So like if you go on a lower time frame, there was still like a 4-hour order block. So that's where I'm hesitating. Either is price gonna come all the way to the 4-hour order block and then go all the way up, or does it have to come and take this high?
Yeah.
Or some kind of like engineer liquidity all the way to this order block. That's where I'm all like, oh my gosh, where is it going?
I completely understand. And that's why, because we've already cleared all these lows, the safest bet is just to focus on intraday. So as you're doing exactly, I was just getting at right here, right? Because if this is our main leg, then we have high, higher low, higher high. We see a BOS right here, right? Now we have low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Where's right the new range? Lower low, lower high, lower low, lower high. And then obviously from where we currently are, lower low, lower high, lower low. So like we identified last month, right? We had these cells, which we caught, or a couple months ago rather, caught these cells, price went lower. Our current range is from this lower high, right, to this lower low. In this case, it's very obvious where our extreme is. Our extreme is right here. Our decisional is right here, as we have identified the past few weeks. And that's initially where we were looking to sell, that I took my first sell positions. So based on here, we already see that this decisional was mitigated. So two things need to go through your mind when you see a decisional is already mitigated. One is, because it was already mitigated here, are you now going to play the mitigation of this candle to then go lower? Or are you going to expect this candle to be taken out for price to maybe come to a refinement in here and then to drop, right? So those two things need to be going through your mind. So now that we have our, go for it. You're gonna say
Yeah, that was it. Because like that's what I was that's where my point was, that if you go to like lower time frames, I think it was like the 30-minute or so, well, the hour or the 30-minute, that's where I see like order flow being established. And that's why I don't know. Oh yeah, right. Hold on, let me see. I can't draw. This, I can't draw. Hold on, just one sec.
You're good.
Okay, right here. That's where price is, right here, right? So what I'm thinking right now, it's there's like several like little small order blocks. So it's price gonna come here and then in the lower time frames, like
oh, we're gonna go there. Don't you even worry about it. We're just starting.
Okay, yeah, because also I see that it's building kind of like some kind of like trend line here. So yeah,
you got it right. So based on where price currently is, we mitigated the higher time frame. This is our refinement of the higher time frame that still remains unmitigated. So right now, a couple options. One, we can use this as an inducement, right? This, like I say about the mitigation, sometimes price can come and double induce into an order block, meaning as soon as the higher time frame is mitigated, we know that this is all that needs to happen. But what can happen is price can come higher to the refinement and then it can go lower, right? So what I would do right now is I would say, where are the liquidity points based on where price currently is? Well, we would sell above this high, and that would be a type 2 inducement, right? Or we could be buying below this low. So now we're trying to establish ranges. So right now, either what can happen, price can respect this current range because we are following order flow. We could have mitigated something inside of here, right? And then now we can be following it to continue to break this low. Or what's happening is we could now actually just have mitigated the low of this range to then go higher. So one of these two is going to happen. So now we need to figure out what's going to be the right one. We go down to the 4 hour, right? Well, let me go back to the 1 day. On the daily, right, we see right here, this order block, did it mitigate anything that we can see to the left? No. Here is an order block, though, that is lying where price currently is, right? So this is an order block that is currently being induced. This is one that we can definitely look for buys at because we have an inducement lying just beforehand. So what I'm thinking is let's go to the lower time frame and map out the order flow and see what makes the most sense based on inducement, based on the setups. Go to the 4 hour. So now that we're at the 4 hour time frame, and we know what our higher time frame structure is, now we want to start to map out the internal, right? So what we see over here is we see, I'm just going to use one color. We see that we have high, higher low, higher high, higher low, higher high. Where is our BOS? We had a BOS right here. This break of structure, we're assuming this is a BOS because we mitigated a correct order block, right? So we mitigated a correct order block. So we think this is a BOS and not an inducement, especially because this order block still remains unmitigated on the daily. Now that we're viewing this as a complete BOS, let me remove this. We're viewing this as a BOS. This internal break of structure tells us now that we are now ready to align and continue our bearish trend. So I would still play the sells right now. I would still play the sells. So I'm looking at, here's our BOS, make this a little cleaner. Here's our BOS. We then have a new low formed. Now that we have our new low formed, clean this up, clean this up. Now I would ask myself, all right, where's our new range? This lower high to this lower low. Now, we did have some form of order block. I believe it was on the 2 hours something over here that was mitigated over here. So we're still following order flow. We're still following order flow right here, right? So now what happened is this monthly order block was mitigated. After it was mitigated, found a refinement just to make a little bit more sense of it. Mitigated. Now money is transferred from where? Here to now over here, right? And now at this time, remember, we're still bearish. So we should still be looking for sells, meaning this is our new wave. This is our lower, this is our high and our new low. Price has now already come all the way back up into here. So we have anticipation. We're going to be targeting this low. Now we just need to figure out, one, where are we? We know where we are in the trend. Two, where do we need to go? We need to go here. And now the third thing that we need to figure out after we know where we're going to go is what? What do you think that is? We know where we are. We know where we need
how we're going to get there.
How we're going to get there, right? So how are we going to get here? What do we need in order to get to this potential destination?
Gas.
Need the gas, right? We need it. So based on that, now we need to figure out internal structure, right? So now if we had to mark a different color for our internal structure within this wave, we know that we're going to have internal structure. Make this a little cleaner, not so sloppy. So within here, we know our internal structure is going to look like this. We're going to have here, high, higher, low, higher, high, all this stuff. Boom, this is a BOS. Here. Boom, this is another BOS. Here. Where's our other BOS? Boom, this now confirms we're bearish again because that last higher low that made our higher high. So now we're bearish again. So now we know this is now the current range that we're trading in. So now, since we're trading in this range, we now need to find out where that gas is. Well, gas is going to be structure, right? So if gas is structure, that tells us within this wave, they're going to be pullbacks and retracements. So let's find out. Like, do you see? I mean, I know you know, but it gets very analytical. You have to understand how to go through everything, right? But here you see you have this low, lower high, lower low, lower high, lower low, lower high, lower low. So immediately, where do you know gas is? If we want to target a low, where's the first place a gas station would be?
If we're gonna target low, well, it was right here.
Boom, right? So if you have an order block in here, sorry, lo siento, no, not really, right? It's not going to work here. So that tells us we want to identify an order block that is lying just above. So when we're looking at this, if we know that's an inducement point, where's an order block that's lying just above? That's doesn't have, right? That has imbalance. Well, what I would do is I would go, let's see if there's an order block in here that doesn't have any imbalance. And this would be, again, structurally, we would look in here for a decisional, and then our extreme would be where it would still be somewhere potentially in here. So if we go down to a 1 hour, do we have anything? No. Do we have anything? No. Let's go down to a 45-minute. Do you have an order block that's left unmitigated? No, but I'm just going to use this for a reference point right now because this was mitigated. So maybe there's something inside of here that could still be mitigated. Here, do we have anything? No, right? So this, yes, this is left unmitigated, but how I always choose my refinements, right, are they need to be the extreme high, right? This does not look like this. Rather, what you just identified, it looks something like this, right? I'll never make a refinement just based off of this. I want to see and encapsulate the actual push up rather than just, find a move that's going downwards. So let's see here, right? We have this identified. We have this. Let's go down to maybe a 40-minute, right? 40. Is there anything over here? Nope. Nope. Let's go to a 35. Do we have any? Oh, cheeky, right? There we have one. Here's our 35. Boom. Do we have anything over here? No. So right now, as it stands, I would either be looking to sell from here, right? Because again, this is not invalid. It's still following, right, order flow. So
order flow.
So I would either look to sell from here, or what I would look is something in here. So if we go to a 30-minute. Nope, let's go to 25. 19. Again, this ends up being a perfect setup that we look for, right? Low, lower, high, sell above, drop. So this would be the first sell I would look. And in all honesty, I would mark this area, but because we need to look how weekly candles are, I would look at a weekly candle. And if we look at the previous week high, and it's my bad, Luis, I didn't see what you had identified. He's Cristo. Let me see here. Because this is how the previous week closed, I would still be looking maybe somewhere in here, but what I'd be more inclined to see is maybe take this out, go a little deeper into here, and then drop. So I know I'm kind of all over the place. That's how I analyze. But if I go to like the 2 hour, for instance, because we know also that this is an inducement sell above, I would really look somewhere in here, because what can happen is we can actually use this as a high to sell above for us to come into here and then drop. So in all reality, in all honesty, I would look here for your first area. I would put in a little alert here, but I think the top best two options in this scenario would be sell here and then sell above, because again, this can just be a type 2 to then sell. And again, this is where intraday trading is going to be the prime, the main focal point. And this is something that we can come back to next week. And let's see, if I go to the 1 hour, is there a 1 hour order block we call a day? Nope. 45. Dang, I don't know. I haven't. Again, I'm just trying to identify the largest one without overflying. Please. Yes. Okay. Hopefully that was. Please. 30. All right, here we go. I will leave it at the 30-minute right here. Yes. Okay, cool. So this is what I would do. I would say your area to sell should be here, right? Obviously, permitting that time aligns with it. The next thing that I would look to do is you can monitor this, but I would think that the best option would just to be sell and wait until we come to this extreme all the way right here and then go lower. Now, of course, you're not going to enter here because that's a 51 pip stop loss, but this is how I would manage. And again, how do you know which one? Wait for timing to align, wait for it to come in your respective session. And then that's all it's going to take. And then from there, where are we going to target? Well, because we aren't going to assume price is going to go higher, we just want to do what? We're going to sell up here and then expect it to come down to here, because on that daily perspective, right? What did we just do? We just mitigated an SMT. So could just come here and then I'd be taking out the SMT, right? Because this is a type 2 inducement into an order block for then it to potentially go higher. So I'd be looking for sells. Yeah, I mean, I would still be looking for sells, but again, first option here, second option here, just watch how it develops. If it's during London session, I might consider it, but I think this is going to be the best option here.
Perfect. Thank you so much.
I hope that helps.
It really did a lot. Thank you.
Perfect. You are welcome.
Griff?
May that.
Yeah, brother. Can you just check on GU also? I think there is an order block on M5 that's already being tapped right now. And that's how the last week closed on GU. M5, just open M5.
Nope.
No, just, yeah. Yeah, just check to the left. The recent, yeah, there is an order block that just been tapped, I think. Yeah.
So typically these order blocks will not work, right? And the reason saying, go for it. I'll let you finish your question. You didn't even ask.
Yeah, that's what I wanted to say. I think this order block's not gonna play out because there's the recent daily